Good evening, everyone. I hope my screen is visible.
Yes, Dinesh.
Yes, sir.
All right, thanks for the confirmation there. All right, so guys, today is the start of module one, that is of statutory and legal compliances. And the first topic of that module is Employees Provident Fund Act. The complete name of this act is Employees Provident Fund and Miscellaneous Provisions Act 1952. So we are going to understand the theoretical part, the conceptual areas, and the latest amendments under this act. And then in the next session, we will do the practical workings under this act. Right. So let's get started. So, like I always say that for every act there is an objective. There is a reason that why that act brought in the existence. What is the reason to bring that act? So the main objective to bring the Employees Provident Fund and Miscellaneous Provision Act was to provide the social security and retirement benefits to the employees who are employed in the company, right? So the major reason was to provide the social security and retirement benefit to the employees who are working in the private organizations. Right. So how this act is going to provide social security and retirement benefits to the employees. So under this act, there are several benefits which are available. The first and most important one is the Provident Fund, which is a saving, which is a saving scheme. Then there is a superannuation pension. So once an employee reaches the age of retirement, that is 58 years, they start getting a monthly pension. So that is called the superannuation pension. Then there is disability pension. So in case if the employee meets with any employment injury and loses their working capacity and become disabled, in that situation also the benefit of disability pension is there under this act. Then there is family pension. This family pension and deposit link insurance, employee deposit link insurance, these becomes active in only in the case of death of the member, death of the employee. If the employee dies, then the EPFO extends the help to their family in the form of family pension, and they provide the insurance under employee deposit link insurance. So overall, everything the employees provident fund is providing related to the social security or the retirement benefit, right? Provident fund, superannuation pension, disability pension, family pension, and deposit link insurance, right? So this is the main reason, and this act provides these many benefits. We are going to understand all these benefits in detail, and this Act, Employees Provident Fund and Miscellaneous Provisions Act 1952. These have three schemes. So if you notice here, the name of the act is Employees Provident Fund and Miscellaneous Provision Act. Right. So it means when initially this act came in existence, it came with only one benefit, that was Provident Fund. That was a saving scheme, Employees Provident Fund scheme. Then later on, they have added two more schemes under this act. So that's why the name of this act is Employees Provident Fund and Miscellaneous Provisions Act, because it is not limited to Provident Fund scheme only. Right? There are two more schemes, and quite possible they can add some more in future as well. Right? So let's get started with understanding all these schemes one by one. So like I said, so for that, first we need to understand that how this act becomes applicable in any organization, right? Since when the employee have to follow the rule regulations of this act, when this act becomes applicable in any of the company. So let's first understand that in which area this act becomes is applicable. So Employees Provident Fund and Miscellaneous Provisions Act 1952 extends to whole of India, right? Earlier it was not applicable in the state of Jammu and Kashmir, but now it is applicable there as well, right? Since the Article 370 has been revoked from there, now it is applicable in pan India, right, including the Jammu and Kashmir as well. So this act applies to whole of India, right? Every state. Then how the companies become applicable under this act? So it applies to every factory and establishment in which 20 or more persons are employed, right? On any day of the preceding 12 months, this act becomes applicable. So on any day of the preceding 12 months, if the employee count of the company, whether it is a factory or an establishment, reaches 20 or more than 20, this act becomes applicable on that organization. Now it becomes the company's responsibility to register themselves under this act. The act once applied,
Dheeraj, sorry,
yes, sir.
धीरज वो तो noisy sound आ रहा background से तो in case you try to
एक मिनट
adjust your mic at least I am
सर
getting
मैं
some
adjust
noisy.
हाँ
Yes, now it is reduced to much extent. Yes.
ओके सिंस आई वाज नॉट स्पीकिंग
Okay.
दैट्स व्हाई इट वाज रिड्यूस मुझे लग रहा है फिर आ रहा होगा अभी
हाँ फिर आ रहा है.
आ रहा है ना तो ठीक है सर लेट मी चेक माय सेटिंग्स
How is it now, sir?
Now it is perfect,
ठीक
Dheeraj.
है सर ठीक है. All right, so we were here on this slide. We were discussing the applicability of Employees Provident Fund Act 1952 in India. So it extends to whole of India and it applies to every factory or an establishment, whether it is a factory or an establishment in which 20 or more persons were employed on any day of the preceding 12 months. So once on any day of the preceding 12 months, the employee count of the company reaches 20 or more than 20, this act becomes applicable in that organization. And once this act becomes applicable, it will remain applicable till the organization exists, irrespective of the number of employees. Even if the employee count goes below 20, this act will remain applicable in that organization, right? So this is the applicability criteria. Now, like I said, there are three schemes which are available under this act. Initially, there was only one scheme, that was Employees Provident Fund Scheme 1952. And then later on, there are two schemes which were added. The another one was Employee Deposit Link Insurance Scheme that was added in 1976. Then they added Employee Pension Scheme in 1995. So the combination of these three schemes gives us this act, that is Employees Provident Fund and Miscellaneous Provisions Act 1952. Right. So now we'll understand all these three schemes one by one in detail. So first we'll have to understand the Employees Provident Fund Scheme 1952. So we have discussed the company's applicability, right? That on any day, if the employee count reaches 20 or more than 20, this act becomes applicable in that organization. So once the act becomes applicable in any company, which all employees of that company or the factory are eligible to avail all these benefits which are available under this act. So the employees eligibility criteria is that all employees employed in an establishment includes employees employed through any contractor, whether the employee is a daily rated, piece rated, temporary or casual. So all sort of employees, whether the employee is a full-time employee, part-time employee, daily rated, piece rated or temporary. So all category of employee is eligible to avail the benefits under which are available under this act if they are drawing monthly wages basic and DA up to rupees 15,000 per month. So any employee, so here only one category of employee is excluded from this definition, and that is the apprentice. Any apprentice is not eligible for this EPF benefits, right? Apprentices are not eligible for the benefits which are available under the PF Act, right? They are excluded in the definition of employees in the EPF Act. Apart from apprentice, all category of employees are eligible to avail the benefits which are available under this act, right? So any employee who is drawing monthly basic and DA up to rupees 15,000 per month are eligible to avail the benefits under this act, right? So now we know that any employee who is drawing up to 15,000 means either equals to or less than rupees 15,000 per month, they are eligible for the PF benefits under this act. Now, what happens with those employees who are earning basic and DA more than 15,000 per month? Is there anyone who would like to answer? Those employees who are earning less than 15,000, they are by default eligible for the benefits of this act. Those who are earning more than, like basic and DA more than 15,000 per month, what happens with those employees? Who would like to answer? Are they not eligible for this benefit?
Yes, they are eligible.
So they are also eligible?
Yes, they are eligible, I think. But employer side, I think it is a voluntary, I think, contribution.
Yeah. So there are few cases that we need to check. In the case where the basic and DA of the employee is more than 15,000 per month. So in that situation, we need to check few things for to identify their eligibility. So what are those things? We'll check that in the coming slide. So any employee who is drawing basic and DA up to 15,000 per month, they are by default eligible for the for the PF benefits, right? Now, this is the eligibility criteria. Employees eligibility, right? If the basic and DA is less than or equals to 15,000 per month, and whether the employee is a new employee, means the first time he is in the employment, or he was already in the employment and he was already a member of PF in his previous company. So whether the employee is a new or an existing member of PF, if his basic and DA is less than or equals to rupees 15,000 per month, that employee must be taken in PF. Means that the employee is eligible to be registered under the PF. Right. Now, the second question is, what if the basic and DA of the employee is more than 15,000 per month? Now, in this situation, we need to check two things. First, we need to check whether the employee was a member of PF earlier or not. Means, before joining your organization, is that person whose basic and DA is more than 15,000 per month in his previous organization was registered in PF or not? Right. So, if he was not registered under PF, so in that situation, like in his previous organization also, he was not a member of PF. And when he joined your company, his basic and DA is more than 15,000 per month. So in that situation, the current employer have the choice to either register the employee or to exclude the employee from PF, right? So any employee whose basic and DA is more than rupees 15,000 per month, and he was earlier also not a member of PF in his previous organization. In that situation, the employer have the choice to exclude that employee from PF, right? Second case is the person was already a member of PF, right? The person is already a member of PF. So when he joined your organization, and before joining your organization in his previous company also, he was registered under PF. So even if the basic and DA of that employee is more than rupees 15,000 per month, if the person was already a member of PF in his previous organization, it is must to register that employee also in PF. You do not have the choice whether to register that employee or to exclude. So if he was earlier a member of PF, you need to register him under PF, right? And you need to provide all the benefits to that employee, which he was getting in his previous organization. Right. So these are the two criteria that we need to check if the employee's basic and DA is more than rupees 15,000 per month. So here in the first option, earlier not a member of PF. In this situation, the employer have choice to either register the employee in PF or to exclude the employee in PF. Right. So if the employer opts to register the employee in PF, means to if he wants to provide him the PF benefits, in that situation, he cannot. If his basic and DA is more than 15,000 per month and he is being employed after September 2014, in that situation, that employee will not be given the pension benefits, right? That employee will not be registered under the pen, like he will be registered in PF, but there will no contribution be done in his pension fund, right? He will only get the PF benefits, not the pension benefit. That thing we will discuss in detail in the coming slides, right? So till now in the eligibility criteria, if you guys are having any question, please ask.
Sir, I have a question over here.
Yes, please ask.
Sir, if a new employee is getting hired for the salary of 20,000,
Hmm.
okay, so it doesn't mean that this employee is, you know, don't want to get registered in PF. Is that okay?
Yeah, see, like I said, you need to check two things, right? That the employee is new, and if the employee was earlier not a member, so it means registered employment, PF registered employment, right? And
Oh,
if his basic and DA is more than 15,000 per month, in that situation, the
uh-huh.
employer have a choice to register that employee or not in PF, right? So the same way the employee also have a choice that he wants to get registered under PF or not. But if the same employee, like if the employee who is joining your organization, right, and he was earlier a member of PF in his previous organization, then there is no choice. You have to register him anyhow
Oh,
in the PF. Okay, I
thank
hope
you so
I
much.
made you clear.
Yeah, thank you.
Okay. Any other questions,
Sir, I have
guys?
a question.
Yes,
Yes,
Atul,
sir.
please ask.
Sir, if the organization wants to enroll in PF,
Hmm.
but the employee count is less than 20,
Huh.
is this organization is eligible for PF or not, sir?
They can apply for the voluntary PF registration, right? If the
Voluntary.
employee count is less than 20 and they want to have a PF code, they can apply for a voluntary PF registration. And it would be totally EPFO's decision whether they want to provide them the EPF code or not, right? So they can apply, and surely most of the cases they get the advanced PF code. But in that situation, they also get another benefit of the reduced PF rate, that is 10%.
Okay, sir.
Okay, Atul?
Wanted to add here, Dheeraj, Atul and
Yes,
Arun,
sir, please.
this act will apply to only those companies where 20 or more people are working. Any company who is working with the help of only 19 people, this act will not become applicable. And there are many companies who, while trying to save money, they only show 19. But as Atul has asked, any company who wants to take voluntarily, yes, there is a law, there is a provision. Any company who wants to voluntarily register themselves under PF, even if they do not have 20 employees, they can do that. They can apply to the PF government saying that हम लोग PF में register होना चाहते हैं, but we do not have 20. तो पीएफ डिपार्टमेंट डिसाइड करती है वेदर दे वांट टू रजिस्टर दैट कंपनी और नॉट. और वैसे कंपनी को इन केस दे रजिस्टर देयर इज ए बेनिफिट ऑफ पेइंग लेसर प्रोविडेंट फंड. In place of 12%, company paid 10% only.
Okay, sir.
Okay,
Sir,
hope
I
we
have
are
a
able
question
to
over
clear
here.
that.
Yes, sir.
Yes,
A
Arun.
company started with 10 members, 10 employees, and
Right,
but in the meantime, I mean, in the time while they have extended up to 30 or 35, still they are not
right.
providing EPF or ESI or something. So, what are all the consequences that the company will face in if?
Fine, penalty, and jail.
Oh, okay. So, who
Yes.
will take this
And
action?
also they'll have
Who
to,
will?
Sorry.
Uh,
yes, sir, you're saying something.
Look, uh, um, Arun, there are many company they have 30
Mhm.
employee, but on paper they will say only
Mhm.
19. In this way they are trying to save. And you asked who will go to jail? The
No, no,
malik
no.
will
Who
go to
will
jail.
take the action? It's a labor.
Pro- yes, yes, PF department is a very big company in itself. PF commissioner is there, regional PF commissioner is there.
Okay.
So yeah, every state, this is what this is. There is you are showing something. So
No, I
there
just
is a
reshared my screen.
full-fledged,
It got
huh,
disconnected.
there is a full-fledged department. PF organization is the very big organization of government, and every state has got PF commissioner. Then over and above state, there is a regional PF commissioner, and there is a central PF
Does the
commissioner.
employee can go and file a complaint against the company that I'm not, taking
Yes,
the,
yes, many companies are getting caught due to
Yes,
employees
yes.
complain only.
Mhm.
Even if an employee complain without disclosing his name, PF authority will come for an inspection in that company.
Okay.
Okay.
Okay, sir. Thank you so much.
Okay, thank you. Over to you, Dheeraj. Any questions? Till now,
Yes,
whatever
sir.
Dheeraj sir has shown, this law apply to which all company, which all employees are eligible. Any questions? Yeah, over to you, Dirish.
All right. So we were here, we were discussing the eligibility of the employees, right? So all those employees whose basic NDA is less than 15,000 per month or equals to 15,000 per month, they are by default, they needs to be registered under PF. Those who are earning more than 15,000 per month, the basic NDA, there is a choice. You need to first check whether the employee was earlier a member of PF or not. So if he was not a member of PF earlier, then there is a choice to register or exclude the person from PF. But if he was earlier a member of PF, then there is no choice, and the employee must be registered under PF. So this is the eligibility criteria, and these are the cases of the employee's eligibility. Now, once the company got registered, the employee got eligible to get the benefits which are available under this act. Now the thing comes is the contribution, because all that benefit that EPFO is extending to the employees are been given on the behalf of the contributions made by employer and employee only, right? They are not giving it from their pocket, but they are giving this benefit from the contributions made by employer and employee from their salaries only, right? So on which amount the employer employee make the contribution? So the amount on which the employer or the employee makes their PF contribution is known as the PF wage. The wages on which the PF contribution is being made, right? The PF contribution is being contributed to EPFO is known as the PF wage. So what is the PF wage? So earlier, the components on which we used to calculate PF was the basic salary and dearness allowance. So earlier, and dearness allowance if it is there in the salary breakup, otherwise only basic salary. This was before Supreme Court's judgment in 2019, right? Before that, we all know that we were contributing PF1 on the basic salary or the DA, basic salary and DA. That was the PF wages at that time. But post Supreme Court's judgment in 2019, we employer got divided in few categories. Some have started contributing PF on the entire gross salary minus house rent allowance, and the another category have started contributing on the entire gross salary, right? Why? Because that Supreme Court judgment that came in 2019 have questioned all those allowance which on which the employers were not contributing PF. Those all allowance were questioned, that why the employers are not contributing on these allowance. So in that judgment, they have declared that all those allowances which are in question, whether it is conveyance allowance, so any allowance that you can think of, all those allowances were in question. So whether it is house rent allowance or the conveyance allowance, medical allowance, special allowance, all kind of allowances were in question. And EPF, this Supreme Court have declared that the contributions on all those allowances also is mandatory. So post that judgment of Supreme Court, now we started contributing on either gross minus HRA or the gross salary, right? So the amount on which we are calculating PF contribution is known as the PF wage. Earlier it was basic NDA, but now it is either gross minus HRA or the gross salary. Some of the companies are calculating on gross minus HRA, and some are calculating on the entire gross salary. Now, why few companies are calculating on gross minus HRA? Did that Supreme Court judgment have ruled out HRA from the allowances in that judgment? The HRA is also in the question. House rent allowance is also in the question, right? So it is not, I'm not very sure that calculating PF on gross minus HRA is 100% compliant. So I have a doubt on that, that even the house rent allowance is in question in that Supreme Court judgment. So I always suggest everyone to calculate your PF on entire gross salary. Now the questions must be coming up that if we calculate PF on entire gross salary, the cost would be very high, right? Yes, that is true. The cost would be very high if you calculate the PF on the entire gross salary. But PF gives us an option to limit our contribution at maximum 15,000 amount, right? So that option was there when we were calculating PF on either gross, on basic and DA also, and that option is still there when we are calculating PF on either gross minus HRA or the entire gross salary. So the capping of the PF contribution on maximum 15,000 PF wages is still available, right? So even though the be of maximum 1800 rupees only, right? Because you are calculating on the entire gross salary, but you are limiting your contribution at maximum 15,000. So if you multiply 15,000 by 12%, you'll get 1800 only. So till that, so according to the PF, the maximum limit is what? Maximum wage ceiling is 15,000, right? But it is not limited to that. They have given a wage ceiling, but the employee and employer are free to contribute on any amount they want, right? They can even contribute on 100% of their basic and DA also. The entire basic and DA they can contribute on in the PF. That is called the voluntary PF provident fund, right? But this is mainly for those who, like, companies who usually wants to limit their cost at the capping limit, that is of 15,000 rupees. So in that situation, even if you are calculating your PF on gross minus HRA or the gross salary, the PF cost would be same. And let me share my Excel sheet here. I would like to show this calculation with you guys. Then we will discuss this source of dispute of PF wages, and we'll discuss on the Supreme Court's ruling also, what the Supreme Court judgment was saying. So we'll discuss on that part also. Let me first share this Excel. I hope my Excel is visible. Is it visible now? Just a moment. Okay, I hope my Excel is visible, guys.
No, sir.
All right. So here we are going to understand the PF calculation, right? Like we have discussed that earlier before Supreme Court's judgment in 2019. Before that, we used to calculate on what? On basic and DA. Pre-judgment, we used to calculate on basic and DA, and option to limit our contribution at maximum 15,000 was available at that time also. But post judgment in 2019, we started contributing on gross minus HRA and gross salary, right? And right now also we have the option to limit our contribution at maximum 15,000 rupees, right? Now let's have a look on that what exactly that PF judgment was saying, right? So for that I need a few components over here. Basic HRA, let's take a telephone allowance and special special allowance, right? And this is the gross salary, and let's take it 10,000. Let's make HRA as 40%, this as 10%, and let's take this as 5,000, right? All right. So here, if you see, we have this salary breakup in which basic is 10,000, HRA is 4,000, telephone 1,000, special allowance 5,000, and gross salary is 20,000, right? So we'll try to calculate our PF on all these things, basic plus DA, gross minus HRA, and the gross salary, and we'll see the impact, right? Let's first calculate PF on pre-judgment. That was basic plus TA. So pre-judgment used to calculate PF on basic plus TA. Let's do that. So since DA is not in the structure, we need to calculate on basic only. So basic multiplied by 12%. 12% is the employee's contribution rate. That comes around 1200. Then post judgment. This is pre-judgment, and these two are the post judgment, right? Now this is not at all valid. This is not at all valid. This is not at all in use. We should go for either gross minus HRA or gross salary, right? Now see this gross minus HRA thing. Gross salary minus HRA. multiplied by 12%. That comes around 1920. Now, third thing is on the entire gross salary. Gross salary multiplied by 12%, 2400. Right. So if you notice here, right now we have not applied that limit thing over here in our calculation. So what was the reason that Supreme Court has given this judgment that we should consider all those other allowances also for the PF contribution? Now, take one more case and let me reduce this basic salary of this person. Let's make it 6,800 only. Now see the difference. When we were calculating PF according to that pre-judgment, that was basic and DA, the PF contribution amount is 816. Post judgment, that amount increased to minimum 1498. Even if we follow this gross minus HRA criteria, or if we calculate on entire gross salary, the contribution will be 1824. So this is the impact. So earlier, somewhat the employers were not providing the 100% benefit for which the employee was eligible, right? So that's why Supreme Court has came in, stepped in, and they have asked that we need to consider all the other allowances also for the PF contribution, because till the time the contribution is being made on more than 15, like on either on 15 or more than 15,000, there is no problem that on which component you are calculating PF. If the contribution amount is either 1800 or more than 1800, nobody is going to ask you that which component you are contributing PF. But if the contribution is less than 1800, like this case or this case, they might ask you that on which components you are calculating PF, right? Because they would like to see if the gross salary is more than 15,000 or is more than the contribution amount, then what is the reason that you are not considering the other allowances also which are eligible for PF? So that is the reason now we calculate on either gross minus HRA or gross salary. So this is on the full amount. This contribution is on the full amount, whether it is basic plus DA or the gross minus HRA and gross. We have not applied the capping on this contribution. Now, what is the benefit of capping? Let's see that. Capping. We apply the capping here. So if basic, if basic multiplied by 12 is more than 15,000, then just a moment. So if basic salary is more than 15,000, then we want to limit it at 15,000. Otherwise, we want to contribute on the actual basic salary of the person, right? This is the formula we are applying for the limit, like for the capping of the PF wages multiplied by the rate of contribution, that is 12%, right? So in both ways, if we are, if the basic salary is less than 15,000, in that situation, the contribution would be same on, even if we are calculating on full or the applying the capping, because the salary is already less than 15,000. Now applying the same thing on gross minus HRA equals to if gross minus HRA is more than 15,000, then we want to limit our contribution at maximum 15,000. Otherwise, on the actual gross minus HRA and multiplied by 12%. Enter. Now see here. Here also the amount is same because we are calculating on gross minus HRA. We want to apply the limit of 15,000. But here, even if we reduce the HRA from the gross, it will go below 15,000. So if the PF wages is less than 15,000, we are calculating on the actual amount. But if it is goes more than 15,000, then in that case, we want to limit our contribution at maximum 15,000. Now see the third case. When we are contributing, like if the PF wages, now this time we are considering the gross salary as the PF wage. If the PF wage is more than 15,000, I want to limit my contribution at 15,000. Otherwise, on the actual PF wage, bracket close, multiplied by 12%, right? And then bracket close, enter. And now see, earlier when there was no capping, the PF contribution amount was 1824. But since we have added the capping over here in this formula, now the PF contribution on 1800, even if we are calculating our PF on the gross salary, the outcome is coming as 1800. So why is this happening? Because we have applied a formula where it is capping, it is limiting the PF contribution at maximum 15,000. So 15,000 multiplied by 12%, what we get? We get 1800. So now, irrespective of what is gross salary, whether it is more than 15,000, the PF contribution would be maximum 1800 in this case if you want to cap it, right? Let's increase this amount a bit. Let's make it basic salary as 14,000. And now see the difference in the calculation of actual and the capping. If you go with the full PF contribution without capping, it will cost you more. It will cost the employer more, right? And the employees net pay also get reduced, because if they both are contributing on the full amount of the PF wage, the this amount would be a cost for the employer, and the same amount will be deducted from the employee's gross salary. So they'll get lesser in hand salary also, but yes, they'll get a good saving amount also. But now, if you see the difference, if we cap our contribution at maximum 15,000, even if we are calculating on 26,000 on the gross salary, our cost is same, 1800 rupees. But if we are contributing on the actual gross salary, the cost is very high. That is 3,120 rupees. So this capping option is always available, right? And you can apply this. And best way to calculate PF is to calculate it on the full gross salary and cap it to maximum 15,000 rupees. That is the best way. Like, even if you are calculating on gross minus HRA, some of the compliance person can ask you that why you have excluded HRA. They may ask you, because consider those situations where a person, this, let's take this example only, and we are considering this case here, that this is the case that we are calculating PF on gross minus HRA, but this person is not, like, since he is getting HRA, house rent allowance, but he's not living in a rented accommodation. Now, in this case, if we are excluding this HRA from the PF wage, is it correct? If this person is not living in rented accommodation, in that situation, is this, if we consider this as a PF contribution, is it correct? Is there anyone who would like to answer?
I think no, sir.
No, right? Why? Because he's not living in a rented accommodation. So this HRA would be also treated as a special allowance only, because he will not even get the any kind of tax exemption on this HRA allowance, because he's not living in a rented accommodation. And this HRA will also be considered for the PF contribution. Like, even if the employer is saying that we are giving this HRA as a reimbursement. So if the person is not living in a rented accommodation, what is the sense of giving any reimbursement, right? So that's why they may ask that you might fail a situation where where the inspector may ask you the reasons for the multiple employee, that why you have excluded HRA from their salary. So the best practice nowadays to calculate PF is this: always calculate on the entire gross salary of the person by capping it to maximum 15,000 rupees, and the maximum cost from the employee side would be 1800 rupees, and the employer's cost would be 1950, right? So this is the best practice. Any question till now, please ask, guys. Any questions?
Okay, is this 15,000 wala concept is clear with everyone?
Guys, if you guys are having any confusion, please ask, because this is really important. Now, see this screen. I'll ask a few questions just to make sure that you guys have understand it or not. So I will calculate the PF contribution here in this cell, right? If I am calculating PF on basic salary multiplied by 12%, is it correct? Guys, please unmute your mic, say yes or no, or say something.
This is
No,
not
sir.
correct. No.
This is not correct, right?
Yeah.
What about now?
No, sir.
So,
This is correct, but employer is paying higher or the employee is paying
Yes.
higher. ठीक है,
Yes.
let me
So
take
in
it.
this
हाँ,
way,
yes, yes, please.
हाँ sir, please,
नहीं
please
नहीं ठीक
go
है
on.
मैं what look PF law is saying that everybody who is getting up to 15,000 per month has to be taken under provident fund. So the meaning of this sentence is that employer are taking all those people who are lesser than 15,000 and paying at their actual lesser salary, and they are also taking all those guys who are more than 15,000 salary but paying up to 15. What I'm trying to say is, if the salary is less than 15,000, pay on the lesser one. If the salary is more than 15,000, pay on 15 only, which is legally correct. This is what Dheeraj sir is trying to tell you.
Hmm.
Whatever is the salary, till the time you are making provident fund on 15,000 salary, you are legally 100% correct. In this case, which is there on the screen, the salary of the person is 27,500. You are, as a employer, as a company, you are free to pay PF on 27,500. Nobody will ask you. But even if you pay on 15,000, you are legally correct and nobody will ask you. But if
Exactly.
you pay PF on less than 15,000, in this case, where the salary of employee is more than 15,000, then you would be wrong. धीरज एक
Yes,
सैलरी
sir.
बनाना जिसमें टोटल सैलरी इज लेस देन 15,000.
Yeah.
ठीक है, in this case the total salary of person is 13,000. So
Ah,
employer has to pay provident fund on 13,000. There is no choice.
13,000.
Till the time the salary is less than 15,000, PF will go on entire salary when the salary is less. If the salary is more than 15,000, you can limit your provident fund on 15. Law will not ask you anything. But there are many companies who pay provident fund on the entire complete salary, whether it is 20 or 30. This is what we are trying to show through Excel. Now, is it clear now why 15 and what is the importance of 15,000?
yes, sir.
ठीक है, लॉ इज सेइंग दैट 15,000 तक वाले को लेना होगा, तो 15,000 तक अगर पे करें तो इट इज ओके.
Yes.
ओके ठीक है, एंड while doing the practical thing, we will show you the multiple cases.
Hmm. Hmm.
What all?
More than 15,000. It will be the expense for the employer as well.
Yes.
Yes,
This
yes.
expenses for employer and employee both.
Okay.
So let me just show you how it becomes an expense for employer and employee. So that's how we calculate. This is the PF contribution. Let's make it the employee contribution. And we are calculating on the gross salary only into 12%. Right. This is the employee's contribution. So employee's contribution always being deducted from the gross salary. So after the deduction, we get the net pay, in hand salary of the person. So employee's PF contribution is always deducted from the gross salary of the employee, and this becomes the final net pay amount, which is finally given to the employee as a salary every month. And employer, the cost of employer is over and above the gross salary of the employee, and the actual cost of employer is 13% of the PF wages. That comes around this. So like I said, the PF employer's contribution is over and above the gross salary. So by that we get CTC, right? So the gross salary.
धीरज वो एम्प्लॉयर कंट्रीब्यूशन में एम्प्लॉयर लिखो
हाँ
ना,
हाँ
पीएफ कंट्रीब्यूशन
sure.
ई में से.
ठीक है. So this is how this employer and employee contribution works. This employee's contribution is deducted from the gross salary of the gross earning of the employee, and finally they get the net pay in hand salary after the deduction. And the employer contribution is added in the gross salary of the employee, and we get the CTC. And the same thing works for the ESI contribution also. Both an employer and employee both have to contribute. Same works for the labor welfare fund also. Both employer and employee both have to contribute, right? That we'll discuss in detail in this PF practical session and the compensation and benefits session, right? So I hope this three criteria is clear with you guys, that what is the PF wages and why do we calculate on gross minus HRA and the gross salary. All right, now let's get back to the presentation. So we have discussed this before Supreme Court judgment. We used to calculate PF on basic salary and DA only. But now after Supreme Court judgment, we consider the gross minus HRA or the gross salary. Calculating PF on entire gross salary by capping it to maximum 15,000 is the best way to calculate the PF. Nobody is going to question you, right? So this is the PF wages for contribution of the PF amount. Now we need to understand the source of dispute from where this confusion have arisen, that what actually is the PF wage, right? Earlier it was basic and DA, now we are saying it's either gross minus HRA or the gross salary. Why there is a confusion? Why it is not clear that on which component we need to contribute PF amount? So the confusion point is the PF Act itself, right? There are two sections in the Employees Provident Fund Act 1952. If you go through the Bare Act, you'll find these two sections, Section 2B and Section 6 of the PF Act, where the Section 2B defines the basic wage. What is the meaning of basic wage? Section 2 is defining basic wage, and Section 6 of PF Act tells us on which components we need to contribute PF, right? Now, these two sections are the source of confusion. Now, let's understand how these are the source of confusion. So let's first understand this section 2B definition of basic wages. It says basic wage means all emoluments which are earned by an employee while on duty or leave or on holidays, with wages in either cases in accordance with the terms of the contract of employment, and which are paid or payable in cash to him, but does not include. So here in this above definition, it is saying that any earning of the employee, any component of an employee which is being earned by the employee, right? Whether the employee is working or it is being paid to the employee as a paid holiday or a paid leave, or right. So any earning of an employee would be considered as the basic wage. Now understand this. Here the definition itself is saying all the components of the employee's earning is basic wage. It is not saying that only the component basic wage. So now what employer has done, they have named a component as a basic wage and started contributing on that, so that they get the lesser contribution for the PF to reduce their PF contribution cost. But what exactly this act is saying, that all those components which an employee is earning is known as basic wage, but it does not include the cash value of any food concession if the company is providing any food allowance. It also not includes the dearness allowance. But if you would notice that we discussed that earlier, it was basic and DA. We used to calculate PF on basic and DA. We'll understand this thing in here. So all the earning components of the employee is basic salary, but it is not the cash value of any food concession, any dearness allowance, that is to say all cash payments by whatever name called paid on to an employee on account of the rise in the cost of living, house rent allowance over time. So here they are saying that house rent allowance is also not in the definition of basic wage. Now, this is the source why now some of the employer are excluding house rent allowance. But here it is not saying, this section 2B is not saying that house rent allowance can be excluded from the PF contribution. They are just saying that house rent allowance is not the part of basic salary, because here section 2 is defining basic wage, right? It is not saying that on which amount you need to contribute PF. So here, from this section only, employer have thought that house rent can be excluded from the PF contribution. Overtime allowance, bonus, commission, or any other similar allowance payable to the employee in respect of his employment of work done in such employment, or any presents made by the employer. It means what this definition is saying, all the earnings of the employee is basic wage, which is in the form of cash, which is in the form of money, is basic wage. But excluding these below pointers, which includes the cash value food concession, the earners allowance, HRA, overtime, bonus, commission, incentives, or any presents made by the employer. Those are not these are not the part of basic salary, but any other earning component of an employee is basic salary. Here, this section 2 is the definition of basic wage. Now, refer this section 6. Now, here it is not saying anything about the contribution. It is not saying that on which component you need to contribute or you need not to contribute. It is just giving us a definition of basic wage, that what exactly the basic wages mean. Now, understand this section 6, which is saying about the contribution and the matters on which components we need to contribute PF. So here the section 6 is saying the contribution which shall be paid by employer to the fund shall be 10%. Now this is from directly from the Bare Act. Now this percentage is 12% of basic wage, dearness allowance, and retaining allowance. Now if you notice here, this dearness allowance is excluded from the definition of basic wage, but section 6 is saying that we need to contribute on dearness allowance also. Basic wages you need to contribute. Dearness allowance is also considered for the contribution of PF, and the retaining allowances also. Any other retaining allowance that the employer is giving to their employee is also considered for the PF contribution for the time being payable to each employee. And here, if you notice this pointer, explanation 1, for the purpose of this section, the earnest allowance shall be deemed to include also the cash value of any food concession allowed to the employee. It means that this cash value, which was also not the part of basic salary, it is also included for the PF contribution, right? So don't go with this definition only that you need to contribute. Like, you need to refer section 6 as well to understand this concept of PF contribution. Here section 2b is only defining PF wage, whether section 6 is telling us that all components are eligible for the PF contribution, right? So now this is the source of confusion. By going through this definition, employer have started naming a component as a basic salary, and they used to just contribute PF on that only. That EPFO have noticed, and they have, even in 2011 also, they have given a notice regarding that you cannot exclude other allowances from the PF contribution. You should consider all that allowances also. Now, on the basis of that 2011's notice, the Supreme Court has given this judgment in 2019, right? Considering, like, there were so many appeals from different employer, different companies. Now that judgment was the combination of multiple cases, right? There were so many companies were caught by EPFO that who were not paying on other allowances, right? They were only paying on basic or DA, excluding all the other allowances. So that judgment is the combination of all those cases with the EPFO and the companies, right? So post that judgment, now this is the definition. I hope that this thing is clear with you guys, right? The source of dispute, what exactly is the source of dispute. Now on the basis of this dispute and that 2011's case and all the dispute between the EPFO and the employer, Supreme Court has come up with the judgment in 2019, where they have stated these two things, huh? Like, that judgment is of around 17 to 18 pages, but what exactly is the conclusion of that judgment? I've kept an abstract of that judgment here. So what Supreme Court has ruled out, that principles which can be excluded from the PF contributions are the following. So the components which can be excluded from the PF contribution can be the allowances which are variable in nature, not fixed in nature. Means any variable pay that you are paying to your employee, which is not the part of their salary, like which is not the part of their gross salary, and is being paid on some special categories criteria only, like the incentives. If you achieve the achieve the targets, you'll get the incentives. So any incentives, variable pay, can be excluded from the PF contribution. Allowances which are linked to any incentive for the production resulting in greater output by an employee. Again, they are saying about the incentives which were related to the productions or the performance can be excluded. Allowances which are not paid across the board to all employees in a particular category. So any allowance which is not common for all the employees in your company, like allowances like house rent allowance, you can say, or any allowance which is not being paid to each employee of any special category, can be excluded. Means if you are extending some allowances to your some specific employee only, allowances which are paid especially to those who avail the opportunity. The allowances, like to avail the opportunity, means the employee, some of the specific employee only get that kind of allowances due to some reason, due to some expenses. So these are the categories of allowances which can be excluded from the PF contribution, but you need to prove that these allowances are from these nature, from these categories. If you are not able to prove that, all those allowances will be considered for the PF contribution. That's what happened with all the companies with which the EPFO was in the discussion in the code. So what conclusion Supreme Court has given is that all allowances which are under question are PF wages. Now consider which all allowances can be under question in that judgment. Any allowance that you can think of, all those allowances were in question. I'll just share that PDF file of judgment with you all guys so that you can just go through that judgment, right? So whether it is conveyance allowance, medical allowance, house rent allowance, or special allowance, any other allowance that you can think of, all those allowances were in question. So all allowances which were under question are PF wage. So all those allowances which were under question are PF wage, means PF contribution is mandatory on those allowances. Salary components examined by authorities concluded that the allowances were in question were essentially a part of basic wage, camouflaged as the part of allowances to avoid the PF contribution. Like I said, the definition of basic wage itself is saying that all the earning of an employee is basic wage, but we employer intentionally started naming a component as basic wage, and we have divided the salary in different structure of the allowances so that the PF cost would be lesser. We can calculate PF on the basic wage only, and that's what the EPFO have find out. And the Supreme Court has also ruled out the salary components examined by the authorities concluded that the allowances were in question were essentially a part of basic wage. That was entirely a basic wage only. You have intentionally break that salary and camouflaged as a part of allowances to avoid the PF contribution. You have intentionally break the basic salary in basic salary and allowances just to reduce your PF cost. This is also the finding of EPFO authorities. There were no material placed by the employers to provide the above exclusion. Right? The employers were unable to prove that all those allowances which were in question are in nature of all these above categories. They were unable to prove that the allowances were in variable in nature. What allowances are in variable in nature? Anything which is not paid in a fixed interval of time. Like if you are paying incentive only if the person is achieving the target, you are not being paid incentive as a part of your salary, right? So anything that you get fixed every month is known as your salary, right? Anything which is not fixed, which you not being paid fixed every month, is known as the variable pay. Anything which you get fixed every month is known as the salary, fixed salary of the employee, also as a basic wage of the employee, base pay of an employee. So the employers were unable to prove that the allowances which were excluded from PF contribution were variable in nature. Then Supreme Court relied on the findings of RPFC, Regional Provident Fund Commissioner, appeals by the employers dismissed, and appeal by the RPFC allowed. Yani, the employers have also filed the petitions on the Supreme Court judgment, but they have dismissed all those petitions, and they have allowed the Supreme Court's final appeals. And since that time, now we have started contributing PF on either gross minus HRA or on the entire gross salary of the employee, and capping of 15,000 is always there with them, the employers, right? Till the time you're contributing on 15,000 or more, nobody is going to ask you that on which component you are contributing PF. But if the contribution is on less than 15,000 salary, yes, there might be the questions that which all components you have considered for the PF wages, right? So this is the Supreme Court's ruling. Any questions till now? Please let me know, guys. Any questions on this Supreme Court judgment? Okay, nobody is asking. I hope it is clear with you all. All right, let's get started. Now we have discussed about the PF wage. PF wage means on which salary we need to calculate the PF. Now let's discuss the PF contribution. Means the rate. What is the criteria of PF contribution? What by what rate we need to contribute PF on the PF wage? So that is called the contribution in the PF. PF contribution is done by employer and employee both, right? Employee contributes 12% of PF wage, whether it is gross minus HRA or the gross salary. So from now, we'll discuss it as PF wage, the component on which you are contributing PF. So employee contributes 12% of PF wage, and that entire 12% goes in Provident Fund. Like I said, there are three schemes in EPF Act. The first scheme is the Employees Provident Fund Scheme 1952. Second is the pension scheme. Third is the EDLI scheme, right? And all these three schemes have different benefits. And like I said, all these benefits that the EPF extends are on the basis of contribution that we make, the contributions made by employer and employee both. So the contribution that employee is making of 12% of PF wage, that entire 12% goes in the PF fund, the EPF scheme, right? And employer makes 13% of the PF wage. Exact is third, like employer's total cost is 13% of PF wage, and that 13% goes in all these three schemes, and apart from that in two categories as well. Let's understand that. So out of this 13%, 8.33% that the employer is contributing goes in the pension fund. 3.67% goes in the PF fund, in which the employee is contributing the entire 12%. The employer is contributing 3.67% only, and the rest 8.33% goes in the pension fund. So the division of 12% is like this of the employer: 8.33 in pension fund, 3.67 in the PF fund, and 0.5% in EDLI, employee deposit link insurance. You can consider it as a premium for the insurance that is extended by the EPFO, and 0.5% in as the PF admin charges, right? PF admin charges is the charges that the companies pay to EPFO for the administration of all this PF account and the schemes and all, right? So that is the cost usually borne by the employer only, right? So this is the contribution criteria of employer and employee in EPFO. Employee contributes 12% of PF wage, and that entire 12% goes in their PF fund. Employer contributes 13% of PF wage, and that 13% gets divided in these four categories. 8.33% of 13% goes in the pension fund, 3.67% of this 13% goes in the PF fund, 0.5% goes in EDL, employee deposit link insurance, 0.5% goes as in PF admin charges. So this is the total structure of the PF contribution. Any questions till now? Please let me know, guys.
Sorry, what is EDLI?
Employee deposit link insurance, that is an insurance extended by EPFO, and that comes in picture only in the case of death of an employee.
Okay.
The employee dies, the EPFO gives this insurance to their family members. Okay.
Okay, sir. Thank you.
Yeah. All right. So, guys,
So
any
the
question
company
if you
have
come up?
taken,
Yeah, yeah. Please ask.
yes,
Please
sir.
ask.
So some company have taken EDLI from outside, from LIC
Yes.
or any other company.
Yes.
So what is the main purpose from them, sir?
If
Why they
see,
apply from outside?
yes. See, the EPFO, the EDLI that EPFO is giving, there is a limit. The maximum limit now is 7 lakh rupees. Earlier it was 6 lakh. Like since September 2020, they have revised it to 7 lakh maximum and minimum 2.5 lakh. This is the insurance amount that you can say, which the EPFO is providing. But if the employer wants to extend more insurance benefit to the employee, they can go for external EDLI schemes, right? In which that external insurance company is giving more amount than 7 lakh, right? In that situation,
Okay,
they
sir.
can that the companies which are going for the external EDLI benefits, they can uh, request for the exemption of this scheme from EPFO. In that case, they do not contribute in EDLI because they have taken it from outside. Okay.
Okay, sir. Okay, sir.
All right. Any further questions, guys? Shall we move ahead? Always feel free to ask your questions, guys, at any point of time.
No, sir.
All right. So this is the contribution rate, how the employer and employee contributes in all these schemes which the EPFO have given. Now let's discuss this. The PF accounts, like I have discussed, these are the schemes which are available in EPFO. Three schemes, and the employer contributes by these rates. But EPFO have accounts also. All these schemes are being managed by the accounts, right? EPF, like Employees Provident Fund, have a different account from which the EPF scheme is being managed. The PF admin charges has a different account from which the admin charges is being managed. Pension scheme has a different account from which the pension scheme is being managed, and EDLI has a different account from which the EDLI is being managed. Right. So these are four accounts, and in which all these schemes are being managed. The account number one stands for the EPF, Employees Provident Fund. Right, in which the employer contributes how much? 3.67%, and employee contributes the entire 12%. So the total contribution that goes in the account number one, the PF scheme, is 15.67%. Account number two, that is PF admin charges. Only, like I said, the employee is contributing in only one scheme, only one account, that is account number one and PF scheme only, right? And that entire 12% goes in that account number one. Employer is the one who is responsible for the contribution in all other schemes and accounts, right? So account number two, employer is contributing 0.5%, that goes as PF admin charges. Account number 10, that the employer is contributing again 8.33%, that goes in the employee's pension scheme. Account 21 is EDLI, in which again the employer is contributing 0.50%. And that's how the employer's total cost is 13% and employee's total cost is 12%. The grand total of this PF cost is 25%. Employer plus employee, the total cost of an employer is 25% of the PF wages. Right. Now you must be thinking why there are accounts, account number 1, 2, and 10, 21. So whenever we file the PF challan, the amount that we show in that challan, we show it in these accounts only. On the basis of the accounts in which we are contributing the amount, the PF segregate the contribution and they contribute that amount in these accounts only, right? So this is the reason that we need to understand these accounts also. Any questions on PF accounts? Please let me know, guys. Account 1 for the PF, account 2 for the PF admin charges, account 10 for the pension scheme, account 21 for employee deposit link insurance. Earlier, there was one more account, that was account 22, that was for EDLI admin charges. But now that one is null and void, and we do not need to contribute in the account number 22. Okay, so these are the PF accounts. So we have discussed about the employees eligibility, PF wages, the PF contribution rates, PF accounts. We have discussed. Now the time is coming that if the employee and the employer is contributing in these schemes, quite possible that the employee need these amount also, and they want to withdraw that amount also. So the employee is giving that option as well, that the employee can withdraw these PF or pension funds, right? But there are some categories, there are some criteria that the person, the member need to follow to withdraw the PF or the pension amount. What are those criteria? Let's understand that PF withdrawal cases, right?
Dheeraj,
Yes, sir.
hold for a moment. Huh?
Ha.
The way people are not asking question, it is bothering us whether we are
Yes, I don't know why they are
teaching in
silent.
the right way or not. Give me 5 minutes. Let
Sure.
me refresh whatever you have taught so far. I am sharing my screen. Okay. फिर मैं is my screen visible, Dheeraj?
Yes, sir, it is visible.
ठीक है. So let's refresh whatever Dheeraj sir has told us right from the very beginning of this act. Provident Fund Act is applicable if there are less than 20 employees in any company. Provident Fund Act is not applicable. Okay, this is clear. But company can go for voluntary provident fund. That is on the choice of employer or company. But law will not ask and inquire you anything. For all those companies where more than 20 employees are working, PF Act is must. Company has to go for PF registration, and all those company who has gone for voluntary provident fund, they would be contributing 10% of basic salary in spite of 12%. Now,
So, sir, it's
yes,
for employer and employee both, or
yeah,
it's for employer only?
both,
Okay.
both. Look,
Sir, in case number one, if later on the number of employees are increased, then what would be the rate? Will it remain the same or will it change?
it will go up.
Okay, 10 to 12.
10 to 12.
Yes.
Remember one thing, the choice to increase this rate of contribution or choice to increase the contribution lies with both the parties at any given point of time. If employee want to contribute more, the employee can contribute more. The employee can increase the percentage, or employee can increase the PF wages. Suppose a PF is getting deducted on 15,000, but the salary of the employee is 25,000. The employee can say that I want to pay PF on 25,000. Okay, let's have a look on 2 3 more slides and keep your questions ready. This slide is clear, huh? PF Act is applicable to which company and which not.
Yes, sir.
Now, once the act has become applicable to any company who all employees are eligible, there can be four category of employees. Either the employee has a salary of less than 15,000, irrespective of whether the person is working for the first time or it is already working since long. First green box says us that. That is the second case, blue box says that about all those person who has come to work for the first time and the salary is more than 15,000. Whenever I am telling you salary, it is basic NDA. So there can be a case when you have hired someone as a new and the person is working for the first time, and before that the person has never worked and his salary is more than 15,000 taking together basic NDA. Third case can be basic NDA is more than 15,000 and the person is working since long and is already a member of Provident Fund. And the last case can be basic and DA is more than 15,000 per month and the person was never under PF. All these cases are clear? Okay, this is very yes बोल दीजिए या no बोल दीजिए.
Yes, sir. Yes, sir. Yes, sir.
There can be four cases. An employee can come under these four cases only. So what will happen to first case?
second scenario and the fourth scenario?
Second scenario is the only difference is that in the second scenario, the person is coming to work for the first time. The person is starting his or her career. Prior to that, the person has never worked.
Okay.
And the fourth case is the person is working since long. The person is already working since long, but he was never a member of Provident Fund. Let's see, huh? Once you see the, so what will happen in the first case? In the first case, there is no choice. Company cannot decide anything else. The company has to take this person under Provident Fund if the salary is less than 15,000. In the second case, when the person is coming for the first time to work and his salary is more than 15,000, you tell us what can be the options?
He can take or he can exclude.
Yes. Company has a choice to take that person under PF. Company has also the choice to exclude this person because his salary is more than 15,000. Provident Fund is talking about only 15,000. Okay. Third case where the salary is more than 15,000 and person was already a member of Provident Fund. If that person is coming to join your company, yes, there is no choice. Since the person was already a member of Provident Fund, you have to take him under Provident Fund. And in the fourth case, where the salary is more than 15,000 and person was never a member of Provident Fund, again there is a choice with the employer company. Company can either take that person into Provident Fund
Sir, what is
or
the difference between second and fourth, sir?
sec. There is no difference. Uh, there is no difference. In fact, this person was working since long but was never a member of PF. If this person was a member of Provident Fund, then we would have landed into third case.
Yeah.
There, like suppose these two cases can happen. Huh? This is not very fancy cases. There can be a case when the person is directly coming from the campus to join you, and his salary is more than 15,000. And there can also be a case when some experienced person is coming to join you, whose salary is more than 15, and he was never a member of Provident Fund.
So there is a little confusion that if any employee join, approximately his salary is approximately 50,000,
Okay.
and he is not member of PF, then
Yes.
but he want to deduct his PF, then there is said that we will deduct the PF amount, but not the pension fund. So the contribution, all
Nahin,
entire the contribution goes.
the question is not correct. You said that suppose there is a person whose salary is 50,000, but
Yes, sir.
PF will get deducted, but and Provident Fund will not get deducted. You said that. Yeah, please
Yeah.
kindly repeat your question then.
Actually, sir, the 12% of employer share and 12% of employee share,
Employees, right?
both are deducted or not?
Both are
Yes.
deducted.
Percentage would be
And
same.
it goes to entire the four accounts, or it goes
Okay,
it
okay.
not goes to pension
ठीक है,
fund.
ठीक है. Look,
Hmm.
the exact word employer contribute and employee also contribute. Deduction is a wrong word. Employee
Okay.
also contribute,
Contribution. Okay. Done,
contribution,
sir.
and it is the responsibility of company to deposit both the amount in Provident Fund. Give me a moment.
Hello.
I think Arun sir is on call. So
Oh,
Take, I am back. Huh? There was a yes, Dheeraj, please complete
हाँ.
whatever you are trying to say.
So Atul,
Yeah.
I think Atul, you were asking the question. See, Atul, agar the
Yes, sir. Yes, sir.
person's basic like PF wage is more than 15,000, right? And the person have joined after 2014. In that case, he will not get the pension benefit. The contribution rates would be same. The 12% from the employer side and 12% from the employee side, right? But since the person is not eligible for pension scheme, that entire 12% of employer and employee both will go in the provident
Okay,
fund scheme only, not in the pension scheme.
Okay, you are discussing something next level of question. Okay, let's wait, Atul. We will come to that also, huh? But first, understand the straight and basic one. These are the normal conditions. The pension is something which Dheeraj sir will be taking in detail. Who will come and who will not come. So, whatever contribution is made, it is employee do not contribute directly to anywhere else. It is the responsibility of company to take 12% from employee ka salary and add their 12% and deposit it to provident fund. So before making payment to employee, employer deduct this money 12% and they add their 12% onto that and then they deposit it to provident fund. This is the case. So we have seen different cases. Now what will happen to PF contribution of 12%, which Dheeraj sir has discussed? PF contribution in this case, where the salary is less than 15,000, provident fund would be contributed on the total salary if it is less than 15,000. Whether 10, 9, or 14, provident fund will get paid on the total salary. In this case, where basic and DA is more than 15,000, provident fund can be capped, means limiting it, can be paid up to 15,000 or can be paid on the total salary. There is a choice. Choice is both the party. If the company want, will say that I will not pay on the total salary, I will pay on 15,000 only. The employer or company is legally correct. Employer has same choice. If they want to pay on the total salary, they are free to do that. In this case, where 15,000 more, again, the same option is there. Both the party can either limit their contribution at 15 or they can pay on the total salary. In this case also. So what I'm trying to say is if the salary is more than 15,000, there is an option. If the salary is less than 15,000, there is no option. You have to pay provident fund on the total salary. If your salary is more than 15,000, you have a choice to pay provident fund on 15 or on the total salary. Now, let's see what employee has all choices. Employee can contribute on the same salary on which the employer is contributing. If your employer is contributing provident fund on 15K, 15,000, you can also contribute on the same. You can contribute on the total salary by saying that I do not want to limit it on 15,000. In this case, what will happen? You would be contributing more than the employer. Employer would be contributing 12% of 15,000, which is 1,800 rupees. Whereas as an employee, you are saying that I will contribute on the total salary. So your contribution would be more. And this can also happen. You will say that not 12%, I will pay more than 12% on my basic salary. This can also happen. You can increase the percentage of contribution also on the same salary. This is called voluntary provident fund, and under voluntary provident fund, employee can contribute 100% of his or her basic and DA. Any questions so far? I have two more slides to share.
Sir, what is the difference between the second point and the third point?
Second is contribute 12% of total salary. Okay. Suppose your basic is 15,000 and your total salary is 20,000. Second case says that you would be paying PF on 20,000 and not on 15,000, which is your basic. Your suppose person basic is 15,000 and HRA is also there and conveyance is also there and the total salary is coming to 20,000. So the employee can say that I would like to pay provident fund on 20,000 on the total salary, which is combination of 2-3 things: basic, HRA, conveyance, special. Am I clear, Arun?
Yeah, sir.
Okay, I will show an Excel also.
Sure. Yeah.
I hope things are getting clear. Huh? Look, this is the salary structure. Suppose this is the salary structure where the basic salary is 16,000, HRA is 8, special is 4, mobile is 2, and the total monthly salary is 30,000. Now see how many options are available with the employer and employee. Don't look at the entire sheet. Huh? Let's discuss.
Sure.
Employer. What all choice employer has? Employer can contribute on 15K. Even if the person's basic is 16, employer can limit its contribution on 15, which is legally correct. Employer is free to contribute on total 16 also. Law will not question you anything. An employer is also free to contribute on total 30,000. Okay, I guess there is no doubt.
Yeah. Yeah. Sure, sir.
Now, employee has also got some kind of choices. Employee can also contribute on 15, saying that I would not like to contribute more than I would not like to contribute PF on more than 15,000, even if his basic is 16. Employee can also contribute, limit his contribution on PF. Employee is also free to contribute on the entire basic, saying that I do not want to limit my contribution of 15,000. Employer has also a choice of contributing 12% on the total salary of 30,000. An employer has also choice to contribute 100% of his basic as a voluntary provident fund.
Okay.
Okay, and
Okay.
this colorful Dhirasal will be taking detail, will be covering this in detail. What exactly all this contribution means is, see the third column, employee contribute the entire contribution in the provident fund only, and employee is not paying anything as admin charges, or to employee is not paying to pension fund, employee is nothing paying in the insurance also. It is employer who is making payment on all the schemes and all the accounts. Out of total 13% which employer is paying, 3.67% goes into provident fund, 0.50 goes as admin charges. In pension fund, only employer contribute, which is 8.33%, and then in the insurance also employer contribute. So in provident fund, total 12% of employee and 36% of employer goes, and the total contribution goes at a rate of 15.60. Okay, this
Does it have the EDLI admin charges in place?
EDL, as Dheeraj sir said, that EDLI admin charges were there few years back. You will still find this column in the Provident Fund website.
Okay. Okay.
But now contribution has been cancelled, void. This is no more existing. But in the formats you will find this. Earlier, government was asking to pay 0.50% in this EDLI admin charge. EDLI is insurance. Once the employee die, the family gets some kind of lump sum money, 6 to 7 lakhs. Okay,
Okay.
this is the contribution, and okay, this is what I wanted to share. I hope things are clear.
Yes,
We were
sir.
a little worried to proceed further because now the more advanced things will come into withdrawal and all advanced.
Sir,
Anything? Yes, please.
if the person doesn't die, where the amount goes?
It will not go anywhere. Insurance is a benefit which one can avail only after death.
Okay.
Okay, this money will keep on accumulating, but if the person is not dying, this benefit will not be extended. Okay, like medical insurance. If you are not falling sick, you will not get any benefit. To get the benefit, you need to fall sick and get hospitalized. Similarly, life insurance. Till the time the person is
There will be money.
living,
Ekta, there is a lot of disturbance in your end.
my end.
Ekta's.
I know everything silent.
हाँ, एकता clear?
Yeah, yes, sir.
ठीक है, so life insurance is a policy which benefit only after death. Anything Dheeraj you want to add? मैं screen बंद करता हूँ.
Nahi, sir, I think you have explained already. Yes, EDLI is the insurance extended by EPFO, and like every other insurance, like if it is a life insurance, it comes in existence only in the case of death, right? So this EDLI is a benefit which will be given to the family members of
Family
the
members.
employee, not
Right.
the employee directly, because that is not a benefit which is extended when the person is alive. It is a death benefit, you can say. EDLI and the family pension both are the death benefits, and that comes in picture only in case of employee's death.
Th- Fine. Over to you, Dheeraj. I am
Yes, sir.
stopping my
Okay.
screen.
All right. Thank you so much for explaining things, sir. Now let's discuss about the PF withdrawal. We have discussed about the contribution. We have discussed about the all the schemes, and we know there are three schemes. PF scheme, which is a saving scheme where the employee usually saves some amount, and on that savings, EPFO provides interest to the employee, right? So that EPF scheme is a saving scheme on which the employee also earn the interest, which the EPFO gives. Then second scheme is the pension scheme. That pension scheme's main motive is to provide a monthly pension post retirement of the employee. Third is the EDLI, which comes in picture in case of death of the employee, and the benefits are extended to the family members of the employee. Right. So since the employer and employee both are contributing in all those schemes, quite possible if the employee is saving some amount, at any point of time the employee wants to withdraw that amount, right? They are in need and they want to withdraw that amount from EPFO. So is that option is there? Yes, that option is there. With EPFO is allowing the employee to withdraw their amount, and there are two types of, like two three types of withdrawals which the EPFO is providing. The first is called the advance PF withdrawal. Like advance withdrawal is the case, like there are two cases for the advance withdrawal also. Earlier there was only one case when the employee was working. While working, the employee can withdraw some amount from their PF account. But now there are two type of advance withdrawal. Like first withdrawal is while working for multiple reasons. Like while working also, the employee can withdraw some amount from their EPF account for specific reasons. Huh? The employee is building a house and he needs some money. There is an option for the PF advance withdrawal from EPFO, right? And there is some eligibility criteria for those cases also, like for the construction of house, purchase of house, and all. The employee must have contributed for at least 5 years in EPF. Only after that they can withdraw for that reason, right? There are some other reasons also for the marriage of self or brother or sister, right? In that case also they can request for the advance withdrawal from EPFO, and there is also some service eligibility criteria of around 7 years. The employee must have contributed for at least 7 years. And there is a case like employee is uh, ill, sick, and for the medical reasons he wants to withdraw. Now, in that case, there is no service eligibility criteria, right? Even in the after the contribution of 3 4 months, the employee can withdraw the PF amount from the EPFO as an advance withdrawal. And for all these reasons, there is a limit given by EPFO that we'll discuss. I'll just share that PDF also, in which all those cases of the advance withdrawal, the withdrawal eligibility criteria, and what limit of amount you can withdraw for which cases would be given. I'll discuss that also. So advance withdrawal can be done while working also for multiple reasons by filling form 31. The form 31 can be filled online and offline both. And the best practice is to nowadays fill all your advance withdrawal by online only. In that case, you would not require any of the employer's interference, right? If your KYC is approved, you can directly fill your form 31 from your own EPFO portal, and the amount would be credited in your account within 10 to 14 days of your advance withdrawal application, right? Second case is up to 70% of PF fund after 30 days of resignation. The employee has resigned, right? And after resignation, there is a case that you can withdraw entire PF amount after 60 days of your resignation. In case you did not get any other job during that 60 days of leaving of your job, you can withdraw entire amount of your PF fund by filling form 19. But uh, EPFO have now recently given an option that what if after leaving the job, employee is in need of some fund, and in that case from where he can get that fund. So the EPFO has given a choice to the employees that after leaving your job, leaving your company, after your resignation, after 30 days, you can apply for the advance withdrawal by filling the same form 31, right? And by that, by filling this form 31, you can withdraw up to 75% of your PF funds, right? This is only after 30 days of your resignation. Like after 30 days, you have withdrawn your 75% percent, and again after 60 days, you have not got any job and you want to withdraw your entire amount. So in that case, after 60 days, you need to fill that form 19, and the remaining 25% of that PF fund you can withdraw by filling form 19 after 60 days. So these are the advanced withdrawal cases. First is while working for multiple reasons by filling form 31. Second case is up to 75% of the PF funds after 30 days of the resignation by filling the forms, same form that is called the form 31. Now, second case is full and final settlement. Full and final settlement is the case where you are withdrawing entire PF and the entire pension fund from your EPF account, right? And there are three cases when you can do the full and final settlement of your PF account. First is the resignation, like if you resigned and after the resignation, after the 60 days also, you have not got any other job. In that case also, you can withdraw the entire PF fund from your EPFO account, right? By filling form 19 for PF fund and form 10C for the pension fund. By filling form 19, you can withdraw entire PF amount with interest, whatever interest is accumulated in your account. And by filling form 10C, you can withdraw the pension fund also. Then second case is retirement. When the employee has served for more than 10 years and the employee have reached the age of superannuation, that is of 58 years, in that case, the employee becomes eligible for the retirement, for the monthly pension. So post retirement, the employee can withdraw entire savings, which is there in the PF fund by filling form 19, and he can withdraw entire saving with interest, right? Post retirement, I'm talking about. Second, he can apply to start his monthly pension by filling form 10D. Now, see that in case of retirement, the employee is not withdrawing his pension fund. For withdrawal, form 10C is required. Post retirement, if the employee is eligible for pension, he can apply for monthly pension by filling form 10D, that is for the pension scheme, and by filling form 19, he can withdraw his entire PF fund with his interest. Third is the death case, when the employee died because of any employment injury or while working. So in that case, the entire amount of EPFO and all can be withdrawn by filling form 20, and that can be claimed by the nominee of that deceased employee, right? If the nominee is not there, the same claim can be done by the legal heir of the deceased employee, right? So these are the PF withdrawal cases. First is the advance withdrawal. That advance withdrawal is the case when you are withdrawing some PF amount while working in the company. Second case is of the full and final settlement, and this becomes applicable only in the case of separation from the company. If you have resigned, or if it is a case of retirement, or if it is a case of death, in that case only, in these cases only, you can do a full and final settlement of your PF and pension account while working. You cannot withdraw the entire sum amount which is available in the PF and pension fund. You can only apply for the advance withdrawal and only for the PF scheme, not the pension scheme, right? And like I said, for advance withdrawal, there are multiple cases. There are multiple cases that needs to be considered. For advance withdrawal, there are many reasons for which you can withdraw the PF fund. I hope my PDF is visible with you all guys. This
Yes.
Yes,
instruction.
yes, Dinesh.
Okay. Yeah. So instructions and guidelines for the advance to be claimed through Form 31. So these are the instructions given for the advance withdrawal, for which all cases the employee can withdraw his PF advance, right? What is the eligibility criteria for the withdrawal amount, and what is the maximum amount that he can withdraw for that specific reasons, right? So there are few paras given here. The first one is the para 68B, that is for the purchase of house, flat, construction, housing, including the acquisition of the site, right? That includes all these cases for the construction or the purchase of house, right? Membership period required. If you want to withdraw the PF advance for this reason, for the purchase of house, flat, construction of the house, etc., the employee must have served and contributed for at least 5 years in EPFO. And what amount he can withdraw? He can withdraw up to this amount. For purchase of site, 24 months of basic wages and DA. For the purchase of house, flat, construction, 36 months of basic wages and DA. Or the total of the employer and the employee share with interest, or total cost, whichever is least, means at least 24 months basic NDA, 36 months basic NDA, or the total employer employee share which is there in the PF fund, or the total cost of the property, whichever is least out of all these three would be given for this specific reason to the employee. And this is allowed for only one time in his entire service period, right? The withdrawal of PF for the construction or the purchase of the house, flat, or land, only once the employee can withdraw the PF advance from EPFO. Right. The same way we have para 68B. Para 68B is para 68. 68DB, withdrawal from the fund of repayment of the loan in the special cases, loan from the agency. In case you have taken any loan from any of the banks or something and you want to repay that loan, you do not have enough funds, you can apply for the advance withdrawal from for the EPFO. But the eligibility criteria is that you must have at least contributed for at least 10 years in EPFO, in the pension scheme. Only in that case you can withdraw PF advance for the repayment of loan, right? What you will get, 36 months of basic wages and DA, or the total of the employee share, whichever is least, or the total outstanding principal and the interest, whichever least out of these three, would be given to the employee as a advance amount. Then there are grant in the advanced special cases like the lockout, closure, employee rendered unemployed without compensation, employee has not received wages for more than 2 months continuously for the reasons other than strike. In these cases, there is no eligibility criteria. The employee can apply even after the service of 1 month also, right? What he will get the employee share with interest, right? I'm getting few chats. Okay. So should I take that question, sir? I think मुझे question लेना चाहिए. So there is a question in the chat box that suppose if the company closed permanently, how should we withdraw the amount if they didn't enter my bank account and the Aadhaar? Means the KYC is not done for the employee and the company has closed permanently, right? In that case, you can apply for the withdrawal by filling the offline forms, right? By filling form 19 or 10C, right? You can apply offline.
There is no requirement to approach the company. We can still go ahead and update our KYC and we can apply for this period.
No, if the company has closed permanently, in that case, how the person would be able to approach the company for the withdrawal? Right.
We have our own UAN number and we can update our own KYC and we can do that, right?
That is also there. But many cases, for the KYC, employer's approval is required. So if the company is closed, the employee has updated his KYC, but the employer has not approved that KYC. In that situation, how will he do that? How will he withdraw that amount? Till the time the KYC is not approved, he cannot withdraw that PF amount. So in that case, what he can do, he can just simply fill the form 19 and 10C, and he can attest that form with a gazetted officer, right? He need to fill that form in front of a gazetted officer, and that gazetted officer will attest the form that this form has been filled in front of me. Now with that form, he just need to submit the form to the EPFO, and the amount will get credited in the person's account within, I think, 20 to 30 days.
I
So
have a
this is
question over
yes,
here. Uh,
yes.
what if an employee wants to change their legal name in PF application?
That can be done offline only.
Sorry?
If the employee wants to change his name, right?
Yeah,
His own name he wants to change.
yeah, only name.
That can be done by joint declaration form, and that can be done offline only. That change his name
But the employer
can
is
be done offline only.
request to approve.
No. Huh, but if you are doing that offline application also, in that case also, employer's approval is required. Means employer signature and stamp is required in that form, declaration form.
But my question is, can we do that without any employer's interruption?
See, if there is a different, if the person wants the correction in the date of birth or in his father's name, right, in his date of joining or date of leaving, he can do all those things by his online portal only. But if it is a case that he wants to change his name, now there are two three things comes up with the case of changing of name in EPFO. First thing, is the Aadhaar approved for the employee who wants to change his name? If the Aadhaar is approved, in that case, the person would not be able to do any kind of modification online in his account. The only option left is the offline modification, and that also after only if the person has updated his name in Aadhaar first. If he wants to change his name, he needs to change his name in Aadhaar first, in the UHID portal first, and
Okay.
then he can approach to EPFO for the correction in his name. Right. So this is the process of name change. For all other reasons, the employee can do the change from his own portal online only.
Okay.
Okay.
Okay. Thanks. Thank you. Thank you.
So, guys, these are the cases where the employee can apply for the advance withdrawal, and for these kind of cases, for the grant of advance in special cases, there is no eligibility criteria. There is no service period required for the withdrawal. The employee usually gets the employee share with interest, right? Only once or twice the employee can apply for this. Then there is other cases also. Advance from the fund for marriage or the post matriculation education of the children. In that case, the eligibility criteria is 7 years, right? The employee must have contributed for at least 7 years. And if this is the person has completed 7 years, in that case, the employee will get 50% of the employee share with interest only once he can apply for this region. Then there is grant of advance to members who are physically handicapped. For those persons, they can apply for the purchase of equipment for minimizing the hardship on the account of the handicap. There is no eligibility criteria for that. The person will get 6 months of basic wages and DA total of the employee share with interest, or the actual cost of equipment, whichever is least, would be given to the employee in form of advance. Right, withdrawal within 1 year before retirement. Right, the employee is about to reach the age of superannuation of 58 years, and he has also served for 10 years. It means that he is about to get eligible for the monthly pension. In that case, he can do a partial withdrawal of the PF fund, right? Only before 1 year before his retirement, and he can withdraw up to 90% of his total PF fund. This can be done only once in his entire life, right? So these are the options which are available for the advanced PF withdrawal. I'll share this document with you guys so that you can also refer this post this session as well, and come up with your queries if you have any, right?
Dheeraj,
So
Can
yes,
you
sir.
please
there
scroll
is
down to that
Ha.
sickness percentage?
Sorry, can you please come again?
Can you please show me what is the percentage for the medical illness?
Medical illness. Okay. Yeah. Here, advance from the fund for the illness in certain cases, right? Like for his treatment, for the treatment of the family. In these cases, if the treatment for his own, right, in that situation, he'll get 6 months of basic wages and DA, or the employee share with interest, whichever least out of these two the person will get. Either 6 months of basic and DA, or the total employee's contribution with interest, whichever is least out of these two would be given to the employee in case of his own treatment, or the case of his family's treatment. In both the cases, the criteria will remain same. There is no eligibility criteria in this also.
Okay, so is that mandatory that we have to submit certificate for the withdrawing this amount?
No.
Yes. Certificate C signed by employer and doctor. It is mentioned at the last column. Neeraj.
It is mentioned here, but for online withdrawal, you do not require to
That's what, because
provide any document. You just need to upload the check.
Require any certificate through online. That's what the
No. In online, it is not required, but if you are withdrawing this amount with this reason offline, in that situation, you need to attach this certificate.
It is offline.
Yes, in case of offline.
Sure,
online, it is not required. Online, you just need to upload the cancelled bank check.
Yeah.
Right.
Actually, yeah.
That's the only requirement for the online.
Thank you so much.
Yeah. All right, let's get back to the presentation. Okay, we have 2 schemes more left. Now, the second scheme is Employee Pension Scheme 1995. Like we have discussed, this scheme provides the retirement benefits, the monthly pension post-retirement of an employee, right? The eligibility criteria is the person must have contributed for at least 10 years of service. The person must have contributed for at least 10 years, and the person must have reached the age of superannuation, that is of 58 years. If both these conditions are met, the person is eligible for a monthly pension, right? Under the scheme of Employees Pension Scheme 1995, these benefits are available: withdrawal benefit, scheme certificate, and the monthly pension. Withdrawal benefit is only applicable if the person is not eligible for monthly pension, means he has not contributed for 10 years and is not reached the age of superannuation. In that case only, the employee can withdraw this pension fund. Like post his resignation, he can withdraw after 60 days. This pension fund can be withdrawn. Second option is the scheme certificate. In case, like even after leaving the job, like he has left the job and he do not want to withdraw his PF fund, right? PF and pension fund, he do not want to withdraw. Like he had withdrawn the PF, but he do not want to touch his pension fund. Why? Because if the person will withdraw his PF, this pension fund, that entire service period for which he had contributed earlier will become null and void. So for an example, if the employee has contributed for 5 years, right? And after the contribution of 5 years, the employee has left his service from his current organization, and he has withdrawn that entire amount. After leaving the job, he had withdrawn that entire pension fund, and again he has joined a new company. He has again served for 5 years, right? So it means that 5 years earlier and 5 years now, he has completed 10 years and he has reached the age of superannuation. Will that person get monthly pension? Who would like to answer? In his first company, he worked for 5 years. At the time of leaving, he has withdrawn that entire pension fund. Years, and now his age is also 58 years. In that case, is that person eligible for monthly pension? Okay, 1 plus 60. Can you please rename yourself? I'm not able to identify who is it. No, he is not eligible for pension fund, though his service period is 10, but for his previous 5 years service, he have withdrawn that amount, right? When he worked for 5 years, and after leaving, he has withdrawn his entire pension amount also. So that entire 5 year service became null and void.
Yes, are eligible for this benefit.
Sorry, can you please come again?
Now, one full stretch 10 years without any break or
Huh.
without withdrawal are eligible for this.
Here, 10-year service does not. Yes. No, break is possible. See, no, break is possible.
So
Quite
the
possible that
break I meant is you shouldn't have been withdrawn any amount from PF.
yes, you must have contributed for at least 10 years,
Okay.
right? There could be gaps that you have worked in your first company for 2 years, then there is a gap of 1 year, then again in the second company you have worked for 5 years, then there is a gap of 2 years, then again you have worked in a third company. By the combination of all these three companies, you have completed 10 years. You are eligible because you have not withdrawn any amount. But if you withdraw any amount from the pension fund for any company, then your entire service period becomes void, right?
Okay.
Then again, you need to serve that much duration to become eligible for the pension fund, right? So that's why those who do not want to hamper their eligibility of pension, they apply for the scheme certificate, right? So usually in earlier stage, people used to apply for the scheme certificate if they do not want to withdraw that their pension fund, right? But nowadays it is not the case. We do not apply for the scheme certificate because UAN is there, right? Even if you do not apply for the scheme certificate and you have not withdrawn your pension fund, if you join any other new company and your UN is linked with that new company, that entire fund can be transferred to your new company, right? But earlier it was not a case. So at that time, people used to apply for this scheme certificate. But now also it is beneficial to apply for the scheme certificate if you want to go for a longer gap on a sabbatical or something, right? You have left the company and you have planned that you will not work for 2 years, you want to study or something, there is a gap of 2 3 years. In that case, it's always a good idea to apply for a scheme certificate as a valid document which certifies your contribution and duration in the pension scheme, right? So that is the purpose of the scheme certificate. Third is the monthly pension. Only if you comply with these two criteria, in that case only you can apply for a monthly pension, otherwise not, right? Let's understand these things in detail. Like here, a member cannot retain his pension membership after the age of 58. So for an example, the person have reached the age of 58 years, served for 10 years, he became eligible for pension and he have applied for monthly pension, right? And after that also he wants to work, and the company is also allowing him to work. So in that case also the person is eligible for the EPF, right? He'll remain registered in the EPF, but his contributions will only go in the PF fund, not in the pension fund, because he have already applied for the pension scheme. Even though he have not applied for the pension scheme, or he is not eligible for the pension scheme after reaching the age of 58 years, in that situation also he cannot retain his membership for the pension scheme. That becomes void after the age of 58 years.
Sir, in that situation, what is the that breakage of employer contribution?
12%, both entire employers 12% goes in EPF, entire employees 12% goes in EPF.
No. I'm talking about that employer contribution of that 8.33 percentage where it.
That 8.33 will start going in PF fund again.
Okay, it is
The rate would remain same, 12%.
Okay.
Earlier that 8.33 was going in
sir,
pension.
what is the maximum? Okay.
Please ask.
So, what is the maximum age for? Sir, what is the maximum age for PF contribution? If an employee completed his 60 years, after that they can avail the benefit of PF and the pension, everything or not?
See,
PF. Normally the retirement age for 58 years. After 58 years, sir, you told us that the entire amount goes to PF fund. But if he completed 60 years, after that the contribution is continuous or it breaks?
Yes, that is continued. So what is the difference? That PF is a saving scheme, right? It is a saving scheme. You are just saving your money in some fund. In return of that saving, that the organization is giving you some interest, right? So for saving, there is no age limit. You are free to contribute till you want. But pension is a
Okay.
retiral benefit, and there is some limit that post 58 years you cannot retain your membership. But since pension PF is a saving scheme, you are free to save your money. But only criteria is if it is a case of EPF, you must be employed with a company. Okay, I hope I made you clear on this.
Yes, sir. Yes, sir. But sir, after 50 years, employee
Huh.
can apply the pension request to PF office or not?
Huh. Yes, he can. See,
Okay.
Yeah.
after 58 years, he can start getting monthly pension also, and he can continue working in his company also. Both options are there.
मतलब ऐसा भी केस हो सकता है 58 years के बाद द पर्सन इज स्टिल वर्किंग कंट्रीब्यूटिंग इन द प्रोविडेंट फंड एंड गेटिंग पेंशन ऑल्सो एवरी मंथ.
Okay, sir.
Correct. Any other questions, guys, from here?
No, sir, we are clear.
Okay, let's move ahead. Okay, so important points about EPS, Employees Pension Scheme, is that on death of an employee while in service, the family, spouse, and the children below 25 years is eligible to receive monthly family pension. In case of death, the family members of that deceased member are eligible for the monthly pension. Right? It is calculated with reference to the age, wage, and service of the member. Age and service determines the eligibility of a particular type of benefit. Wage enables the determination of quantum of benefit for monthly pension, right? The age and service duration will determine the eligibility for the benefit. Wage, the salary, last on salary, or the salary in the previous 12 months will determine the quantum of the benefit. So the maximum limit maximum pension that the EPFO is giving is of rupees 7500, right? So what maximum pension the person will get after their retirement will depend upon the service of the person and the last drawn salary, the salary of the person. So the formula for the calculation of pension scheme, how much monthly pension this person will receive, the formula is pensionable salary multiplied by service period divided by 70. What is pensionable salary? Pensionable salary is the average salary of the previous
Last
12
12 months.
months. Average salary of
Yes,
the
sir.
last 12 months multiplied by total service period divided by 70 is the formula for the calculation of monthly pension for any employee, right?
Service period is number of years.
Number of years of service in which
Okay.
he was in the service, he have contributed in the
Oh,
pension scheme.
correct.
Sir, sorry to interrupt you. What is it 70?
This is something which is given by EPFO. Like this is the formula that has been given by EPFO.
Okay.
Not very sure what exactly this 70 is. Yeah.
And sir, if any employee completed 9 years and 8 months, then he is eligible for pension or not?
Okay, very good question. And for that, we have an next slide. These are the cases in which we will discuss the eligibility of the person, whether the person is eligible or not. When can he apply for the voluntary pension and all? So we have this slide. I hope that your question is being answered from this slide only. Right. So there are the cases.
Okay, sir.
These are the age criterias and the type of benefit the person will get. Yes, please ask.
So I have a query. In the previous slide, you mentioned that pensionable salary, right? For the calculation.
Pensionable
So
salary.
is it a gross salary or a net salary?
Like we have discussed.
So you said like average of
what is the PF wage?
50.
PF wage is the amount on which we are contributing PF. Same way, the pensionable salary for the pension would be the salary on which we are contributing the pension fund, right? The same amount, gross, or the maximum 15,000 that on which you are contributing the pension.
Got it.
That would be the salary.
Yeah. Thank you.
Okay, now discussing the cases of the pension, right? What if the person has completed 10 years but his age is below 58 years? What if the person have attained the age of 58 years but his service is below 10 years? So in that cases, what are the benefit that for which the person is eligible? So first, let's discuss the service. When the service is below 10 years and the age of person is below 10 years, so the person is eligible for benefit or not? Is not, because not none of the criteria has met. His service is also less than 10 years and his age is also below 58 years. In that situation, what options he have?
Yes, sir.
He can ask for a scheme certificate, apply for a scheme certificate, or he can withdraw the entire pension amount from his pension scheme. So both options are there. He cannot apply for the pension, but he can withdraw, or he can apply for a scheme certificate if he is not withdrawing that amount, right? So this is the first case where the service and age both are below from the eligibility criteria. Second case is when the service is less than 10 years and the person have attained the age of 58 years, right? Service is less than 10 years and his age has become 58 years. Is he eligible for pension? No, he is not eligible for pension. What option he have? He have only the option of withdrawal, not the option of scheme certificate. Why? Because he has already achieved the age of 58 years and he cannot contribute in pension fund. So there is no option when the person will become eligible for the pension, right? Because he has attained the age of 58 years but his service is below 10 years, and further he cannot contribute also in the pension fund, so he can only withdraw that pension amount. Now the next one is if the service is 10 years and above but his age is below 58 years. Matlab he have served for 10 years, he have contributed for 10 years or more than 10 years, but his age is below 58 years. But in that case, he need to wait till he reaches the age of 58 years to apply for the pension, monthly pension. In that case, he can only apply for the scheme certificate. He need to wait till he reaches the age of 58 years to apply for a monthly pension. If the service is 10 or more, but his age is less than 58 years. Fourth case is if the service is 10 years and above and have attained 58 years. Service is 10 years and above, attain the age of 58 years, whether continued in service or retired. Matlab, after attaining age of 58 years, he wants to leave, he want to retire, or he want to continue the service. In both cases, he can apply for a monthly pension, right? Because the both criteria are met. He have served for 10 years and he have also reached the age of superannuation, that is of 58 years. In both cases, the person is eligible to apply for the monthly pension, right? He can start his monthly pension. Fifth case is if the service is 10 years and above, but not in employment, means he have made his mind that he do not want to work further. He have contributed for 10 years or more than 10 years, but he do not want to work further, and he has completed the age of 58 years. What benefit is available for this case? Eligible for scheme certificate, like he can apply for a scheme certificate, or he can apply for a reduced early monthly pension, right? If the person have served for 10 years and his age is between 50 to 58 years, in that case, the person can apply for a scheme certificate, or he can also apply for a reduced early monthly pension. I hope from this point that question has been answered, right? Who has asked? Atul, आपने पूछा था, I believe.
My question is still pending, sir.
What is
If
your
the
question?
service period is the 9.8 months
Huh.
and he is attaining the age of 58, then he is eligible for pension or not?
No.
So matlab, it means that if you know that no.
So see,
Normally, sir,
these
at the
cases
time
are
of
these cases are very clear, like clearly written by them, by EPFO. Only if the service is 10 years or more than 10 years and his age is 58 years, then he will get the monthly pension. If the age is below 58 years, but more than 50 years, and he has contributed for 10 years and more, then only he can apply
Okay.
for a reduced monthly pension, right? So if you are saying that if he has contributed for only 9.8 years, right, he have contributed for 9 years and
Okay.
10 months, and he have reached the age of
Okay.
superannuation, that's what you want to say, right?
Okay.
In that case, he cannot
Right.
apply for a monthly pension.
Atul, what justification you have if you think that 9.8 years and 58 years of age will make someone eligible to get pension? क्या what logic is there? आपको मतलब कैसे क्यों लगता है कि ये होना चाहिए? मतलब if you in
Sir, at the time, at sir, actually, at yes, sir. Actually, sir, at the time of full and final settlement of an employee, if the employee that completed his 5 years, 0.8 months,
correct,
then we will
correct.
consider as a 6 years in gratuity cases. But
Hmm.
I have a doubt in PF, so
नहीं
नहीं मैं
that's
समझ
why
गया
I'm
था मैं समझ गया था this question is arising out of gratuity act.
हाँ हाँ
In gratuity we round
yes,
it.
sir.
We take
Yes, sir.
4.8 years as 5 years because gratuity act says that
Yes,
240 days of working would be treated as 1 year, whereas in provident
yes,
fund it
sir.
is not there.
Hmm.
It has to be 12 month of contribution, then only it will be treated as 1 year.
1 year.
यहाँ राउंड ऑफ होगा वो अलग नहीं है यहाँ पे.
Okay, sir.
Okay, Dheeraj, I have a
Yes, sir.
query. Case 2,
Case 2, below 10,
below 10 years attend
58 years.
हाँ
Yes, sir.
अच्छा the एक तो the first case is fifth वाला 10
हाँ.
years and above not in service.
Hmm.
ओके मैं भूल गया, 2 cases were exactly same, मैं उसमें समझने जा रहा था.
Below, अच्छा यहाँ पे you must be
Third and fifth.
10
Third and
years
fifth.
and above, below 58 years, 10 years and above, completed 50 years of age.
But
अच्छा.
not 58, huh?
हाँ हाँ हाँ.
Okay.
So
So
यहाँ पे क्या हो रहा है? He can only apply for, because he, यहाँ पे the possibility is that इसने service तो 10 years का कर लिया. He have served for 10 years, but his age is below 58 years. So there is a possibility that person will attain an age of 58 years one day, and he will get full benefit of his monthly pension. Second case was fifth one, sir.
hmm.
When the service he have done is more than 10 years or more than 10 years, but his age is 50 years, right? But in bracket, if you notice, I have mentioned that not in employment, means after contributing for 10 years, he have decided that he will not work further. So means after the age of 58 years, he will not be in a employment. So there is no possibility that on any day he will get that eligibility for the full benefit of the pension. So that is why he will get the reduced, he can apply for a reduced monthly pension only in that case. I hope इसको clear हुआ sir.
Okay, okay. नहीं मैं बाद में भी समझ लूंगा, ठीक
अच्छा,
है.
ठीक 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 है. The sixth point was total and permanent disablement while in service below 58 years, disabled pension to the member. Like I said, in case of death and disablement, there is no eligibility criteria. The person becomes eligible for these benefits from day one, right? So that family pension, which is a death benefit for the employee, the pension that is extended to the family members of the employee, there is no service criteria. If the employee dies in the very first month or on a very first day of his service, the employee is eligible, like employee's family is eligible for the family pension, right? So there is no criteria for the pension, family pension, in case of death of an employee, right? If the age is below 58
Sir,
years. Ha.
sir, you have mentioned that the spouse and first two children, children. So it's
Ha.
for first two children, or if you have 3 children, 4 children, so all are eligible for pension or not?
Ha. Spouse and children's below 58 years. Sorry, below 25 years.
Below 25 years. In you
Ha.
have
Children's
mentioned
below
in last
25
slide.
years.
So
Ha.
Okay. So there is no capping of children, that first two children or
There is no capping,
anything.
and whatever would be the eligibility amount, whatever would be the monthly pension amount, first they calculate the entire pension amount, the fixed pension amount. Then they divide that pension equally in all the family members to those
Okay. And
who
if
are eligible.
employee, okay, sir. And if employee is an unmarried, sir,
Sorry, if employee
if
is unmarried,
unmarried,
huh, in
then
that
the
case,
pension goes. Yeah.
the parents of that employee are eligible for these kind of benefits.
Okay. So both parents
Both.
are.
Yeah.
Okay. So they are getting separately pension for father separate and separate for mother, or only for one.
Sorry.
तो वो मतलब both are separate सर, मदर के लिए अलग से पेंशन, फादर के लिए अलग से पेंशन, और
नहीं देखो, there are 2-3 cases. First क्या होता है कि first the employee must have given a nomination, right?
Okay.
At the time of joining the company, the employee must have specified a nomination. That nomination can be 1, 2, or more than that also, and they distribute the benefit percentage, that whether the employee this nominee is getting the 50%, this is 20%, or this the 10%. They specify the percentage of benefit
Understood,
also,
sir.
right, at the time of joining.
Okay.
But there could be a
Okay,
case
sir.
that the employee has not given his nomination and he died, right?
Okay.
So in that case, we do not have any
Right.
proof that to whom we will extend the benefit. So in that case, there is an option that the family members of the employee who claim that they are eligible for this benefit, they can claim the benefit as a legal heir of the employee. That हिंदी में हम लोग बोलते हैं ना उत्तराधिकारी.
Okay.
They can claim as a
Yes,
legal
sir.
heir, and they have to present a certificate of that they are the legal heir of that person, the deceased member, right?
Okay.
So in these way, they extend the benefits to the family members. So if the person have specified the nomination at the time of
Okay.
joining, so this becomes very clear to whom the benefit will be extended. If the nomination is not there, then usually the employer asks the family member to claim the benefit as a legal heir with the certificate,
Okay, sir.
right? And usually in case of death, the employer is the one who process these application for the benefits for the family members of the employee.
Okay,
Okay.
sir.
Yeah. All right. Any question from this slide? Please let me know, guys.
No, sir.
All right. Let's move next. This pension scheme certificate we have discussed. This is a documentation proof given by EPFO that certifies your service duration, and nomination that also certifies a nomination, that who all are the nominees. So see, this is a specimen of this scheme certificate. This all information is mentioned in a scheme certificate: name of the employee, his PF number, date of birth, father's name, date of joining, right? His total age at the time of leaving his last company, reason for leaving that company, right? His total past service in EPFO pension scheme, 7 year, 7 months, 10 days. See here, those who has asked
Nothing has
if
been
the service
rounded
is,
off, huh?
if the service is 9.8, if the person is eligible, if you notice here, his actual service is 7 years,
Okay, sir.
7 months, and 10 days. It should be exactly 10 years only if the only after the person is eligible for the monthly pension. Okay.
And then there
Then
is a detail of nominees
yes,
at the
then we
bottom.
have nominee details here in the bottom, right? His last salary also is mentioned over here for the calculation of what? For his pension, for the calculation of his pension. So these kind of details are mentioned in the scheme certificate. And nowadays, usually we do not apply for the scheme certificate because all the information is available in the online portal of EPFO, right? But it's good to apply for the scheme certificate if you are going for a longer gap, for any sabbatical leave or any education leave or something. So in that case, this scheme certificate is very beneficial, right? So from this slide, we are done with the pension scheme also. Any question till now, please feel free to ask, and then we'll discuss this third scheme, that is Employee Deposit Link Insurance Scheme 1995. This is the last scheme in the EPFO.
Okay, sir. So scheme certificate will be provided by PF department,
PF department
or employer?
PF department. See,
Okay.
PF, this scheme certificate also we get through that 10C only, form 10C only. For pension withdrawal,
Okay.
which form we fill? 10C, right? In that form
Right.
10C, we have option you want withdrawal or you want to apply for the scheme certificate. You just need to check that. You want to, a scheme certificate or you want to withdraw. If you check the scheme certificate, you'll get the certificate. Okay.
Okay, sir.
All right. Now coming to the last scheme, that is Employee Deposit Link Insurance Scheme 1995. Right. This is an insurance extended by EPFO, becomes active only in the case of death of a member. Employee Deposit Link Insurance EDLI. The main objective of EPFO behind this scheme was to ensure that the family of the members get financial assistance in case of death of the member. The insurance cover depends on the salary drawn in the last 12 months of the employment before death. So this EDLI is also calculated on the average salary of the previous 12 months. Average PF wages of the employee in previous 12 months. EDLI contribution, we have discussed, only the employer contributes in this scheme at the rate of 0.5% of the PF wages, subject to the maximum of rupees 75 rupees. So in EDLI also, we have a maximum limit of contribution that is of rupees 75. Right? If you multiply 15,000 with 0.5%, you'll get 75 rupees. So in EDLI, even if you want to contribute more than 75, that option is not there. In pension fund, is there any capping like this? Yes, in pension fund also, there is a capping of 1250 rupees. And even if you
Yes,
want to
sir.
contribute more than 1250, you cannot do that, right? Because that option is not there in the pension scheme, right? If you multiplied 15,000 by 8.33%, you'll get 1250. And you are not allowed to contribute more than that in the pension fund. Now, for an example, even if you have contributed more than 1250 in the pension fund, in that case also EPFO will transfer that excess contribution in the PF fund by default, right? So there is no point that you contribute more than 1250 rupees in the pension fund. Now, can we contribute more than 1800 in PF fund? Yes, we can. There is no limit in the
Yes,
PF
sir.
fund. They have given us a upper limit of PF wage, that is of 15,000, but we are not bound that we have to contribute up to 1800 only. If we want, we can contribute more than that only, right? Why so? Because that is a saving scheme, right? And there is no restriction on the saving. You can save whatever amount you want. But pension scheme and EDLI scheme, these are the schemes which are, these benefits are usually extended by the EPFO only. The insurance you will get lifetime post your retirement. The insurance benefit from the EDLI you'll get will be given by EPFOs. That is why there is some limit given for the EDLI and the pension fund, and there is no limit on the PF fund because that is a saving scheme. You are saving your amount, and you can get that amount whenever you want, right? So EDLI have a limit of maximum 75 rupees contribution every month for one employee, not more than that. Employer only contributes in EDLI on behalf of that employee. Now there is some silent feature for the EDLI. The insurance benefit can be availed by the family members, legal heirs, or nominees of the members, right? This benefit is a death benefit. Only the family members, legal heirs, or the nominees of that member can apply and avail this benefit of the EDLI, Employee Deposit Link Insurance. Members of EPFO are automatically enrolled for EDLI. Means when you register an employee in EPFO, they automatically gets registered in the pension fund also and in the EDLI fund also. There is no separate registration for those schemes. An EPFO member is only covered by the EDLI scheme as long as he or she is an active member of the EPF, right? They are covered in EDLI. Like this EDLI benefit will only be extended when you are in an employment, right? The employee dies when he was in employment. When he left the job and he dies, this EDLI benefit became nil and he'll get no benefit from EDLI. There is no minimum service period for. Yes.
What if I change the company and or if I'm not working for nearly 1 year, my UN
Hmm.
number still remains the same, right? So
Yes,
that
yes.
considered as active or inactive?
Active, active. UN number remains active, and whenever you change company, right, that company assigns you a new PF number. So PF number becomes deact- uh, can be deactivated whenever you leave a company. The PF number becomes deactive, right? But the
But
UN
my UN
number,
number will
huh?
still remain the same, right?
Sorry, can you please come again?
My UN number will be still remain the same, right?
Yes, UN number remains same, and the PF number is something which changes from company to
Company
company.
to company, yeah, yeah.
Yeah, yeah. So the UN remains active, and the PF number becomes inactive whenever you leave the company.
So
Okay.
for this the EDLI scheme,
Hmm.
if I was not on job for 10 months,
Hmm.
and will that be considered as
No, no, no.
no?
The day you leave your company, this becomes inactive. EDLI
Oh,
becomes
okay,
inactive.
okay, that is what I want to know. Okay,
Yeah,
okay.
yeah.
Thank you so much.
Yep.
Look, the relationship between UAN and PF number is like that. UAN is your PAN number, which remains same, whereas you can open your bank account with any bank. With every bank, your bank account number will change. Similarly, with every company, your PF number will change, but your PAN will remain same. And similarly, UAN is one and unique number, which will remain same with your entire life, irrespective of with how many companies you work. With every company, your PF number will be changing, but your UN will be remaining same. UN and PF is same as PAN and bank account number.
I
You
got
can
confused whether this works under a UN number or PF number. That's what the confusion was.
Mm-hmm. This works under PF number, you can say.
Okay, thank you so much.
Yeah. Right now, we were here. There is no minimum service period for availing EDLI benefits, right? Like I said, for death and disablement cases, there is no eligibility criteria. Those who suffer death or the employment injury and become disabled, they are eligible for EDLI benefit from day one, right? The claim amount under EDLI is 30 times the average monthly salary of the previous 12 months of the employee. And that salary would be basic and DA up to maximum 15,000 rupees. Not more than that would be considered as the salary for the EDLI calculation. The EDLI is only calculated up to 50,000 rupees in the previous 12 months, subject to a maximum of 7 lakhs. Earlier, this limit was 6 lakhs, but now recently in September month, this limit has been increased to 7 lakh. And the minimum limit of this EDLI benefit is 2.5 lakh. So the family member of any deceased employee will minimum get 2.5 lakh rupees from EPFO in behalf of this EDLI. Employer can opt out of the scheme in case he takes a higher paying life insurance scheme for employers under section 17 to A. That this question we got in the beginning only, that why can the employer
many companies are taking EDLI from
LIC and all.
LIC and
So
other
yes,
companies.
this is legally possible, and this option is available in section 17 2A of the EPF Act. Right, guys? So these are the
Okay, sir.
salient features of the EDLI. All right.
Okay.
Right. Now coming to the documents required for the claim of the EDLI. The claimant must submit the following documents along with Form 5. Right? The employer need to submit Form 5 along with the following documents. Which documents? The death certificate of the member who died, guardianship certificate if the claim is done on behalf of a minor family member, nominee, or a legal heir, is by other than the natural guardian. So in case if the claimant is a minor below 18 years age, his guardianship certificate is required. Uh, Whomsoever is the guardian of that minor kid, the guardianship certificate is required for the claim of this EDLI scheme. Succession certificate in case of claim by a legal heir. The employee has not specified his nomination. In that case, whomsoever is claiming this benefit as a legal heir, they need to submit their succession certificate with Form 5 of EDLI and a copy of cancelled check in which account they want to receive this EDLI amount. So these are the documents that is required to claim the EDLI benefits. UN number. So we are almost done with all these three schemes of EPFO. First was the Provident Fund scheme, pension scheme, and third one was the EDLI scheme. So we have completed all the schemes, and there are some points for the UN number, right? UN number is a unique UN number is unique in nature, and it is a 12-digit number. Every employee have a unique UN number, right? It cannot be duplicated nowadays. Earlier this was possible, but now it is not possible, since the server of UN and the server of UHID has been clubbed, right? So this UN number cannot be duplicated. It is unique for every employee. Every time an employee switches job, EPFO allots a new member identification number that we also know as PF number, which will be linked to the UAN. So UN remains same, but PF number changes from company to company. Right? These are the some features of the UN number, and these are the penalties and damages. First of all, you need to understand that the most important activity in the EPF Act is to file the monthly return, monthly ECR return, monthly challan of the PF. And by this return only, EPFO comes to know that how much you are contributing in which of the funds for the employees, right? And the deadline for this ECR filing is 15th of every month, right? If you delay by this deadline, there are some of the consequences and the fines that can be imposed by EPFO on the company. What are those? Penal damages up to 25% per annum and the interest at the rate of 12% payable on the default deposits, right? Whatever is the default, whatever is the delay on that default, there is a penal interest of 12% that can be imposed. The bank accounts can be attached for the recovery of the dues. If your company has not paid the PF contribution for previous 6 months or 7 months or 1 year, so there is a good amount of dues that are pending to be paid, right? To recover those dues, EPFO can attach the bank accounts of the company, right, with the EPFO. They can realize those accounts from the debtors of your company, right? They can also attach the movable or immovable properties of the company to recover those dues. Arrest and detention, if this recovery is not possible, usually the arrest and detention can also be done. And there are some other actions that can be taken under section 406, 409 of the Indian Penal Code, and section 110 of the criminal procedure code of the in Indian penal code, right? So these are the actions that can be taken on an employer in case of not paying dues on time, or if there is a good amount of dues that you have not paid since long time. They can recover those amounts by these modes. They can attach your bank account, they can recover it from your debitors, they can attach your property, the company's properties, etc. There could be the arrests and the detention for the recovery of this panel damages. These are the PF forms which are frequently in use in the EPFO. There are some forms which are inactive nowadays, but let me just give you a brief on these forms. Form 31, we have discussed that this is used for the PF advance withdrawal, right? For all reasons of advance withdrawal, we fill Form 31. Only if you want to buy your LIC policy from your PF fund, you need to fill Form 14, right? All these links are downloadable, and you can download these forms from these links only. Form 10D, if the employee has reached the age of 58 years and he have served for 10 years or more, he can claim for monthly pension by filling Form 10D. 10C, if he wants to withdraw that pension fund or he wants to apply for the pension scheme certificate. Then Form 13 for the EPF account transfer. This is not in use nowadays because this account transfer is automated nowadays. Then Form 19, final employee provident fund settlement. If the employee leaves the company, he wants to settle his PF fund, he need to fill Form 19. Then Form 20 for EPF final settlement in case of death of an employee. Form 2, declaration and nomination for EPF and EPS. So it is a very important form. Whenever an employee joins your company, always give them this Form 2 to fill for the declaration and nomination under the EPF and the EPS schemes. Then Form 5IF to claim the EDLI benefits, we need to fill Form 5IF. Form 15G, if the service duration is less than 5 years and the withdrawal amount is more than 50,000, in that case, it is very good, very advisable to provide this Form 15G with your withdrawal form. Form 5, this is null and void nowadays. We register employee online only through the PF portal. Then there is Form 11. This is a UN declaration form. So whenever an employee joins your organization, you need to ask them to provide these two forms, Form 2 and Form 11. Form 2 is for the nomination and declaration. Form 11 is the declaration of their services and registration in the UN. From this, you come to know whether the person was earlier a member of PF or not. And if he was a member of PF, he was a member of both PF and pension schemes or not. So this is really an important form. Then there is a joint declaration form. Any kind of correction that is required, whether it is your name, father's name, date of birth, date of joining, date of exit, etc., you have the option to do those correction by filling this form, joint declaration form. Earlier, this option was available offline only. Nowadays, all these activities can be done from your PF portal only. You just need to provide the documents for the change, and you can do it by your end only from your PF portal only. So these are the forms which are required in the EPF Act. And we are done with the today's session. The theoretical part we have
So,
completed. Yeah, please.
sir, I have a request, sir. Sir, could you please explain Form 15G in brief, sir?
Yes, Form 15G is mainly for the exemption of tax on your PF withdrawal, right? So if you are withdrawing PF and your service, when you are withdrawing your PF contribution duration is below 5 years, and the amount that you are withdrawing is above 50,000. In that case, it will attract TDS deduction from your withdrawal, right? TDS will be deducted from your withdrawal amount. So to avoid that TDS deduction, you need to provide Form 15G. This is a declaration that you have filed a nil tax and you are not eligible for the TDS deduction in your previous financial year. So this is usually to avoid the TDS deduction on your withdrawal.
This is optional in nature. In fact, it
This
is
is
not
optional.
mandatory that you submit 15G. If you are not submitting 15G, PF department will deduct tax and pay you the rest of the amount.
Correct.
15G is to save your tax deduction on PF amount. You certify that this is my income, this is my saving, all those kind of ITR sort of. So if you are submitting 15G, you can save tax. If you're not submitting, your PF amount will not get stopped. PF department will release your amount, but they will do TDS calculation on the amount before paying it to you.
So 5 years,
And
sir,
if the
the
service
total
duration,
service duration is more than, sir, 5 years.
Then there is no need of this 15G.
Okay, then the
Then there is
TDS
no need of
will
this
be
15G.
deducted.
Will not be deducted.
Okay, done, sir.
Only if the service is less than 5 years and the withdrawal amount is more than 50,000. Like if the service is also for less than 5 years, and the withdrawal amount is below 50,000, in that case also this 15G is not required.
Okay,
Okay.
and service is more than 5 years, sir. Then also TDS not
It is not
intact for
It
required.
is
my.
not required.
Huh.
Okay, sir.
TDS will not be deducted.
Thank you, sir.
Yeah. All right. So we are done. Any other question, guys? Please ask your questions now.
Sir, what is the criteria for PF and ESI registration in case of new establishment? And
Hmm.
what are the documents required? And who is the person responsible for this
Yes.
registration process?
See, earlier we used to do this registration offline, right?
Okay.
But nowadays, PF and ESI, both registrations are 100% online, right? You need to
Okay.
register online only by going through the PF portal, right?
Okay.
And there's the
Okay.
list of documents like the list of employees of your company and address proof of your company, incorporation proof of your company. These kind of documents are required for the registration, right?
Okay.
And
So we can initiate online only.
online only, and anyone can initiate that process. You can also initiate, any employee of your company can also initiate.
Okay.
Whomsoever is authorized for that can initiate that registration process. Let me
This is
just
very easy, Anita. There are few minimum documents:
Okay.
employer ID, address proof, number
Okay.
of employee, and digital signature. Once you apply, you immediately get the PF code.
Okay. So anyone can apply on.
Yes, if you
yes.
if you have a company and you want to apply for provident fund, in
Okay.
30 minutes you will get the PF code
Okay.
online.
Okay. Got it. Okay.
Okay, and then you have to submit further documents or not. But it is 100% online. They ask for few documents, and you yourself have to certify. It is self-attested document. कहीं और से certification नहीं चाहिए. Once you upload the document, PF code would be given to you.
Okay, sir. Thank
Okay.
you.
uh,
And sir, what is
See,
the
this is
process
the
to
site from
apply
where
DSC?
you can apply for the PF registration, right?
Yes,
This is
Atul.
the
What is your
EPFO
question?
website, and these are the
Uh,
important links.
sir,
Common registration. Sorry.
hello.
Yes, you finished.
Sir,
There
what
is a
is the
question.
Huh.
Atul ka question. Yes, Atul.
sir, what is the process to apply DSC?
DSC is something
We'll
which
discuss this in the next
digital
session.
signature. Okay.
Huh. Huh. We'll
Okay,
discuss
sir.
this
Done,
in
sir.
the next session when we'll go through this entire PF portal. We'll discuss the employee registration process, exit process, the PF ECR, how to register the DSC and all. So everything we'll discuss in the
Okay, sir.
next session on the coming Saturday. Right, that can be done from here
Okay, sir.
only. Establishment, DSC, e-sign. How to
ठीक
register that, the entire process we'll discuss in that
ठीक
session.
ठीक है.
Okay.
There is a like one confirmation is pending from our side as an employer. तो
हाँ
अभी हम उसको नहीं
हाँ
करते हैं. Next class में we'll do it live.
हाँ, that we can do so.
KYC confirmation है.
ठीक है guys, so we are done with today's session. Any questions, any doubts, please let us know. Anything that you want to ask, or else we can close for the day. You can come up with your queries anytime you want.